All right, we're live.
All right. Welcome to Bootleg Weekly, guys. As you can see, Tevis is traveling again to the Vatican City, being a financial advisor for the Pope, something like that anyway. So a little bit different setup, but same Bootleg Weekly. We've got a couple of topics here. We'll for sure be discussing HIMS, a little bit of SoFi, maybe sprinkling some NVIDIA as well. Some macro stuff as we look at the year of the end of the year, AI related to that, and of course, NBIS as well. Once we exhaust our bank of topics or we get to that time, we'll have our Q&A period. And so feel free to ask questions that are completely unrelated, but know that when we get to those, we might have no opinion or just we don't have enough information, and we'll always let you guys know. Tevis, how are you?
Yeah, good, man. Good. I'm only on one screen, like on a kitchen table, so I have to figure out my life. And I hope that I'm actually coming through okay and not like 360p to people. So I'm sure they'll let me know if it's horrible quality. Thank you, Alonzo, for becoming a member. Much appreciated. But yeah, I'm looking forward to having this chat. It is currently midnight here, but I did do a little power nap, and so I'll be fresh and ready for this chat.
You didn't have to slam a Celsius, did you?
Dude, it's crazy. My fridge here is full of energy drinks, and it was so tempting. And I'm having a water instead. So
yeah, at midnight, it's gonna mess you up if you do otherwise.
Yeah, well, especially like I'm coming off of jet lag too, so like my body doesn't even know what time it is, and if I add that, I'm screwed.
All right, so let's look at maybe a stock that we're both fading a little bit on as far as bullishness. Now, to give some context on this was my pick as far as the stock gift giving from last year. And I got to give that, but Chris, Data Driven Investing, and also Tevis had all said, hey, we would have given it too if had they had an opportunity. So, a lot of us were bullish, and we can take a look where it's at right now. There is HIMS. We'll do year to date, and I'll put it up against the S&P 500 as well. All right, so let's pull up that there, and then year to date. All right, so HIMS is up and has outperformed the S&P 500 year to date, 38% up versus 17% for the S&P 500. Of course, it was up immensely, almost 200% at one point in late February. And so, a lot of people that maybe have bought in a range where it's actually down from there. So Tevis, sorry, I closed that. Let me, if you don't mind, reshare this. And I want to share one, I thought, pretty interesting piece of news as it related to HIMS. This was compiled by Nurse Jerbear, or HIMS House, rather. And here's the original source as well. This is GLP-1 monthly pricing. Now, HIMS is more than just a GLP-1. It's more than a weight loss play, but this was a big factor of why they were able to grow their year-over-year revenue so immensely. And now that it's off the shortage list, no longer the case. And you can see their monthly pricing, which is a little bit interesting. So this is comparing apples to apples, low dose. And we can see HIMS is here on the pricier side, along with Roe. I can see in person, I went to a clinic because I had a minor infection in my thumb. And even there, they're shilling GLP-1 stuff at a lower price point than also HIMS. Monthly pricing, so this is mid-dose, 1 milligram per week. HIMS also is on the higher side too. And then monthly pricing, high dose, that's 2.4 milligrams a week. HIMS is also, it's the same price point no matter whether you're looking at it. And then, of course, bulk is right there. So they're in better company, but they're on the higher side time and time and time again. What do you think about this, Tevis? And this is, does this change anything for you on HIMS? Does it concern you at all?
Well, I posted retweeting that post saying I'm starting to lose my conviction in HIMS, and got a little bit of pushback, let's say, from the community because they are, all gas, no brakes when it comes to undervalued, quote unquote, high potential companies. But the fact of the matter is that there's a lot of factors here that are not going the business's way, and it largely remains on the behalf of management to prove it out. For pricing to be on the higher end is disappointing because when we started investing in this company, Roy, they were marketing themselves as the cheap alternative. They were marketing themselves as the affordable option. You can go with HIMS and do a subscription. You have to avoid the high fees you're paying at Novo or at Eli Lilly. And we were expecting them to capture a large portion of the market because they were the only real, them and Bro, you might say, were the only real affordable options, and they were very competitive on pricing. But now, I don't know if you saw the Novo news as well, with Novo coming out with this, pill, and their stock was up like 8 or 9% earlier today. And then HIMS also being among the more expensive options. Well, all of a sudden, you're sort of playing in a different ball game right now. And that's just from a pricing perspective. That doesn't even account for all these other aspects that we're seeing with the business. The growth is more in doubt than it was before, whether they can achieve their very aggressive targets that they set and even raise their forecasts. The macro landscape is still dubious. The lawsuit fears still loom. And it just seems management is very desperate in terms of a lot of their positioning. Saying stuff like, "Oh, we're partnered with Novo. We're in discussions," just to like pump the stock, and then selling into rallies and doing all of these things that, I don't know, it's just giving me a weird vibe from the management side of things. You're having turnover and people who just joined for several months, like the Amazon guy, Nader Kabani, and he was there for 5 months, and now he's no longer in that role. And you're not seeing as much visibility as we saw at the beginning of the year for a lot of initiatives. And I just think that the other shoe is eventually going to drop, where this company is going to report earnings and it's going to be materially lower than anybody had forecasted. And they're going to say, "This is the new paradigm, guys. Like, we're not seeing the labs feature yield results anytime soon. It will, and the business will grow, don't get me wrong, but I don't think it's going to maintain the same clip." Now, you could counter that very fairly to say, well, Tevez is not trading at the same price where it was, so it doesn't need to compound at the same clip. But I think there is still that misconception, given just how people were responding to me saying I'm losing conviction, that people still think this is the company that it was last year when it went from 20 to 80. Well, it went from 20 to 80 because it was mispriced in the market. And I think right now the market is definitely pricing in a lot of real risks. Now, I'm not saying it can't go to 80 again. It absolutely can, but the onus is on management to answer some of these questions. And largely, just given their recent history, I'm losing confidence in their ability to do that effectively, to put to rest shareholder fears that the growth can continue in a meaningful way, and that the testosterone products are going to scale like wildfire, that the menopause products that they rolled out are going to scale like wildfire, that labs is going to be the adhesive for their ecosystem and the thing that differentiates their moat against all competitors. And so you need all of those pieces in order for you to have a competitive product offering, especially when all of a sudden you no longer have as big of an edge as you did 6 to 8 months ago on the GLP-1 front. Novo is more competitive on pricing. Novo has the same form factor. Eli Lilly is competing with new offerings that are more effective in terms of the amount of weight loss. So it's not the same. Like, you cannot expect as HIMS management to blindly grow and the market around you does not adapt. It will always adapt. The market has adapted. It sent a clear signal. Now the ball is in the court of HIMS management to prove that they can still innovate and they can still adapt further. And that's why I'm losing conviction.
Yeah, and I don't think it's I don't think any of that's too crazy. There's pieces maybe that I disagree with just slightly, but it's not like overall, I think we're both less bullish than we were at the beginning of last year. And it's not necessary. Like, we knew that the shortage list would end at some point. Yeah, I expected a lawsuit. We didn't get that. The thing for me, like beyond what you said, and you raised a lot of good points, is they're doing, you know, acquisitions, which, you know, that's part of their strategy as well. They brought in some key people like Mola Ilashwani, but the picture of what HIMS is trying to build and the strategy that they're using, it's a little bit more murky than it was last year. Last year, I thought we had a really good glimpse of exactly what they're trying to build. And now I wouldn't say they're trying to necessarily pivot, but there's international launch, which is, you know, kind of a question mark. We can kind of see the strategy. The labs you mentioned, you know, peptides is a piece as well, but there's all these little pieces, and it's a little bit blurrier picture. In addition to the yellow flags that you have, it's not enough for me to sell out, but it's enough for me to just say, hey, I'm just going to hold where I'm at right now. Now, the GLP-1 pricing stuff, that's not a big deal for me at all. It's not really a GLP-1 story. It's not a weight loss story. Weight loss is one of those important products, but I think, you know, really the market is kind of waiting to see, and I think fair enough, how the testosterone and estrogen does, and of course the international launches as well. They're coming up over the next 2 reports against harder comps just because of the GLP-1 influx. And then in the second half of the year, it'll transition into easier comps just because they didn't have so much of the GLP-1 revenue, that sugar rush that they're doing the year-over-year comp against. So I'm not optimistic, like as far as, I think it'll probably be range bound, and could be surprise for the first half of the year. And I'm okay with that for the sizing of my position. Now, if the stock, nothing else changes and the stock just collapses to, you know, 15, 20 bucks a share, I'll be glad to add a lot more at that point. If the stock rockets the other way, or, you know, I've mentioned this before too, that I see an opportunity out there where I'm like, I don't have enough money out there. HIMS, out of my very concentrated portfolio, is the one that I have the least conviction, and I'm so bullish. But if I'm like, in other words, if something emerges where I'm like, well, let's just say hypothetically, NVIDIA, nothing has changed, and it just drops on its own to like 120 bucks a share. HIMS is gone, and all that's going into NVIDIA, just as an example.
Yeah, it's a question of risk reward. And I think right now, the risk reward is, of course, not as good as the last time it was at 34 bucks back in, you know, January or March or whatever. Tanner, shut up. Get out of here. Also, thank you, Ricardo, for becoming a member. Appreciate that. But it's also a better risk reward than 2 months ago, perhaps, when the stock had already reported earnings but was trading for 50 bucks a share. And the reason why I say that is because HIMS is currently under $8 billion. And if they can keep up their growth rates even a little bit, then they're underpriced. I think that they have a good trajectory ahead, especially with that short interest being where it still is, and even higher now. It's like 35% short interest. So, I love these. This is probably, I mean, perhaps the last stream you guys get to see this. This might be gone by New Year's. New year, new me, baby. I also just don't want to terrorize my family through the holidays with this. They're living in fear right now that I'm going to keep it. So we'll see. But my point is, Roy, that like, yeah, absolutely. Look, 2 things I'll say. Number one is, if I make a post like that where I say I'm questioning my conviction, I would love to have a dialogue around, okay, why? What's the pros? What's the cons? What's the risk reward? So on and so forth, as opposed to immediately being villainized. It's like, dude, first of all, like, sorry for the expression, but like, go fuck yourself. Like, I don't owe any. I told this to somebody. I was like, man, like, this is not an arranged marriage. I don't have to stay here for, you know, the cultural and societal norms. Like, my portfolio works for me. My money works for me, and I can cut loose at any point. The management team, I don't owe them anything, right?
Yeah.
I'm taking on the risk of making that investment, and if that investment no longer fits my conviction, I'm out, bro. So first of all, I want to have a dialogue, like, hey, okay, this is the pros, this is the cons, this is the risk reward, this is, you know, you're going into it with eyes wide open. Secondly, to your point, if HIMS drops to $15, well, the risk reward is going to look much better at that point if you still believe that the story is intact. And right now, there's a big question mark in my mind for my conviction if the story is intact. And I think we're going to need one more earnings. And that's the risk that I'm taking. I cut my position very heavily. HIMS is still like 5% of my portfolio, and that's a big chunk, man. 5% is a big chunk, and I need one more earnings. And realistically, one more earnings is gonna, give me more information to go off of. And if it happens how I think it's going to happen, they're going to revise downwards and they're going to get crushed on that earnings. And it's going to be a really tough decision around, do I sell it at, having done the round trip of having a $21, $22 cost basis, holding to 80 and selling back at $22? Or are they going to be able to turn it around and give me some hope that, okay, wait a minute, these guys still have a competitive advantage in the market and can still grow meaningfully, and they're actually undervalued right now. So I need one more earnings for me to suss that out. But so that's the first piece. The second piece is like, what is it trading at? And what is the risk? And if this money goes to zero, let's say, well, okay, you took a asymmetric risk to reward bet, right? Because you're buying this thing at $8 billion and you believe that it's going to go to 80 in the next 10 years. Sure. Based on their growth rates, you can extrapolate that outwards. And that's a second piece. So I'm assessing both of those pieces simultaneously in my mind to say, is the thesis broken? In which case, sell regardless of valuation. And if not, then what is the valuation to dictate the level of sizing you go into it? Is 5% too much or is 5% too little?
Yeah, I mean, I agree with you. Like, basically, I'm kind of waiting for that earnings as well for that, and also PayPal, where I'm not PayPal. Like, I'm not expecting like to be exiting after the earnings or anything, but it depends on a lot of what they do for guidance. If they're like, hey, it's going to take another transition year, and we're going to underperform and under execute, and here's some terrible guidance, I'll definitely take some off the table at that point. Just because the thesis is weakened, and it has weakened some. I've taken some off. HIMS likewise is like what they do for their full year guidance. Now, I don't think HIMS is going to guide necessarily like super conservatively. And if you throw this up, Tevis,
Yes.
it shows the what analysts are expecting. So I'm doing this in the quarterly for Fiscal AI, and it's actually a pretty tight range. And you can see further out to it. Of course, it expands not too uncommon. You can see the revisions here. That's what I think is particularly interesting. Is it's all been downward, not a great thing. There's also been price target revisions as well. EPS I've not looked at, so let's give it a moment to load here. But you can see it's actually quite a long range for EPS revisions. You can see the trends here, and it's all been substantially downward as well. So we'll have to see, how this continues. Now, the further out we get, of course, the fewer analysts that we have, but price targets, let's also look at that too. And you can see on the high end for this is a year from now, we're looking at 85, consensus is 44, low is 25. And honestly, Tevis, like, do these feel now that you can look at how many, there's not a lot out here, but if you were to throw out a price target, like, where would you fall in this if you had to for next year? Or in other words, like, does this feel a little bit too optimistic? Does it feel too pessimistic, or just right?
A high of $85, a low of $25, and consensus of $44. What does that feel like to me?
Yeah.
It feels like analysts have zero idea what the fuck they're saying, dude.
And fair enough. I think that a lot of this,
part of it is get a
What's that?
dartboard. Get a dartboard. The numbers are the stock price, and you just start throwing, man. Whatever you hit, triple 20, $60 stock price end of the year. 3. Like, and it's just like, if you have that far of a spread, analysts have no idea. And normally in that scenario, you would have some alpha because you're like, oh, I have a better idea. So in the case of SoFi, for example, right? Somebody thinks it's going to go to 8. Somebody thinks it's going to go to 35. And you're like, all right, cool. I have a very strong opinion there. But right now, I don't have a strong opinion on HIMS over the next 12 months because, again, I need to be waiting for that next earnings to see if the thesis is broken or on the way to being broken or not. And that's really going to dictate where that goes in my mind.
Yeah.
Sorry, I cut you off. Go ahead.
No, I was going to say, like, that's what it feels like to me is like, this is a broader, now it's not an extreme high number of analysts or anything like that. So that's part of the what's factored in there. But this is about as wide a spread as you see on a stock. Like, just sometimes there might be like one outlier that throws it out, but like here, we just don't know. And so that's why that Q4 earnings is going to be reporting in the new year, it's so important because, likewise, I would have a hard time putting a price target on HIMS this next year. Like range bound probably for the first half. I think we might get a really good buying opportunity for the second half, but we'll have to see. So, anything else on HIMS, or should we pivot on to our next topic?
Yeah, I want to just bring up a couple comments on HIMS, and then Elijah says he bought more today.
I'm curious, Elijah, are you still as bullish, or are you like, I think that you're like us, maybe slightly less bullish, but on a scale of 1 to 10, like where would you fall on that, with 10 being extremely bullish?
Let me add on to that question from Roy, Elijah. On a scale of 1 to 10, where would you fall 12 months ago, 6 months ago, and today? And that's what I want to see. Like, how has that scale changed for you? And then I also want to bring up this comment. So I was an accident. 1994 says HIMS could have massive potential in the UK as well as the EU. They don't offer a lot as of right now, but healthcare there kind of sucks. This is false. Zava offers a lot in, I think it's 8 countries. So yeah, they could offer much more in the EU, in the UK, also in Canada, right? Because they expanded there. I think international expansion is going to be a big part of the thesis in 2026. If I had to make a predictions video for HIMS in 2026, I would say international expansion is going to drive a good chunk of the growth. That's a sort of measured bet you could make, but not having a presence or not offering a lot, I think is discounting Zava. And Zava, I think, saved their butt on the last quarter's earnings.
Oh yeah, it did for sure. Yeah, and like that's the other unknown too. Like even if they had very crystal clear guidance, I don't think even HIMS knows, because the healthcare scene is so different in Europe and also Canada than it is here in the United States. How it'll perform relative to other plays, it won't be like, is it just okay? It's Zava, which Zava was a fine business. You know, they acquired it. They'll do some revenue there, or is it going to be like this massive opportunity that they tap into? I lean towards it just being accretive and decent, but we'll like it's an unknown, and that's why it's that funnel is so long.
Yep. Do you want me to bring your thing up or keep going with some HIMS
comments? Well, this is on SoFi, so our next topic.
Oh, okay, just give me a little bit of slack on the comments. I think we're going to see a lot of growth in the next 2 earnings reports and think they will be pushing for solid beats, I hope. Why hasn't Zava rebranded as HIMS yet and not advertising a lot? Great question for Andrew. I would also be interested in the answer to that question. What's holding HIMS back? I'm thinking of taking a position. In my opinion, HIMS is holding HIMS back. Yeah. It's really the management team needs to, I think, communicate the vision a little bit better in terms of, okay, I understand the big vision. Like, we want to do preventative care. We want to jump into the screening and just be this like 24/7, 365 app, so that you don't need to get our products down the line, so that you can take better care of yourself. Okay, great. How does that look like from the next 12 months, 36 months, 5 years? Are you going to do a wearables piece? Are you going to have a watch or a monitor or an Aura ring? Are you going to compare with Whoop? That's a fair question that you could ask, right? Because the vision is so ambiguous that so many things fit inside of it. And so I understand the total addressable market is large for these, but in every total addressable market, they have competitors. And so I would like a better articulation of how they plan on achieving those growth rates, because right now, all we're seeing so many of their competitors gaining ground. From, like, you can look at website traffic, you can look at the app downloads, you can look at whatever you want. And it's like competitors are coming out very quickly with comparable offerings. So management needs to step in front of it and not sell shares, but instead offer some answers and offer like a roadmap. Like Lemonade, for example, did their 10-year roadmap. And it was just like an investor day type of event, very thoughtfully done, a lot of slides, and they spoke to this. They invited investors, they invited analysts, and it really outlined a vision for, hey, here's where we see the growth drivers over the next short term, mid term, and long term. And I think HIMS could benefit from something similar.
Yeah, I agree. That's also looking for something similar to PayPal. Put up Elijah's comment. He did reply at 6:25. He says, "I'm still bullish but cautious about the core business growth. Disappointed in the HRT rollout so far, and have questions around labs. I still think 2026 will be a great year if management executes." The problem is the if there. But yeah, I agree. I mean, I'm not willing to sell my position because I'm like, the potential is still there. In the past, they've executed well. I feel like they've stumbled more than they should have this year, and it's mostly their own fault. And then here's another comment. Also leaking unfinalized Novo deal and not giving an update is not cool. It's been 2 months. Novo made a bunch of deals with other telehealths and left out HIMS. I still think there's bad blood there, although I do think the lawsuit risk is very low right now. But
I think that deal is not existent. I think he said it in hopes of pumping the stock for whatever reason. I don't think it's true. And if that's actually the case, I mean, that's very hard to prove. But if that's actually the case, then that is a red flag staring in your face.
yeah, at the very least, it's a yellow right now.
Yeah. Okay. Let's move on from HIMS. But like, look, this is exactly the level of dialogue that I was hoping to have on X, and it just people get married to their stocks, man, and it's just it's crazy to me. So, anyways, not to spread FUD or bearishness, I also, by making that post, I also said in that post, like, I'm not immediately selling out of all my shares, but I will size appropriately for right now. And I am in the direction of selling all my shares if these questions don't get answered. But as you know, with many names, I give it 2-3 quarters to have management have enough time to be able to turn it around in the first place.
Mm-hmm.
All right, bring us to the next topic.
All right. So this was somebody that posted, brilliant poster, good guy on SoFi. You noticed some LinkedIn stuff related to this. I had some emails, a bunch of emails from SoFi that seem kind of to line up with the same thing. So your post, if you want to just kind of introduce this side of the topic as far as a small business banking, but for some context before we get into that, last week, they mentioned in that Crypto in America conference that Notice said that they were getting into big business banking. Maybe it's a little something different than small business banking, but so Tevis, kind of break down for us like what you've observed and what you're thinking that this means.
Yeah, so this was on LinkedIn. I follow SoFi. I'm connected on LinkedIn with people on SoFi, and I follow, whenever Noto posts, it gives me a little ping. Whenever Crystal Point posts, it gives me a little ping. I saw this come up in one of the roles, and interestingly enough, it is a small business banking role. Now, it's different than big business banking. So big business banking is, do you know what the difference is, Roy? Like the key difference?
Other than size, no, not really.
Okay, so I didn't either, and so I basically had a little session where I was asking ChatGPT, and it explained it. So small business banking is more like a commercial. It's a service. It's helping a business essentially run. It's about infrastructure. So you set up a checking account or a credit card or a loan for like, a small restaurant in your area. You help the business owner manage the day-to-day cash flows, paying employees, buying inventory. Now, SoFi doesn't offer those direct services. I mean, the most direct one that we've seen being asked for is like Kyle is a perfect example. He's a member of the SoFi retail community. He's a contractor, and he wants to be able to have direct deposit as a contractor. Now, as a contractor, you might get different amounts of money. It's very difficult to suss out, like, hey, what does that direct deposit look like to have a checking account, essentially, a business checking account. Now, big business banking, on the other hand, at least how Gemini was explaining it, is like acting like a sponsor bank on the commercial side of things, essentially letting other institutions rent out SoFi's banking charter and technology to issue their own cards, to process payments, So we're thinking millions of transactions, ACH, wires, issuing thousands of cards, similar to how we've seen where they've leveraged Galileo to issue a debit card or a credit card on behalf of whatever. It's just wrapped. So in the big business banking case, I think the cyberbank core is going to help really a lot with payment services for commercial clients. But the small business banking, it makes money on interest. It makes money on monthly fees. It's having a checking account for small businesses, letting them manage their day-to-day operations. Whereas the big business banking really makes money on the volume, like interchange fees, processing fees, and all the transactions that flow through the system because they're using SoFi's architecture. So that was the big difference in terms of the structure of how I understood it. Now, there might be nuances that I might be thinking of that are wrong, but yeah. So like an individually owned motel is a small business, and you need to manage. Okay, what are the expenses? What are the inputs? So on and so forth. But like Hilton is a big business. They might offer their Hilton checking accounts or their Hilton payments points, credit card, and you need to handle that entire volume. So that's how I understood the nuance to be.
Yeah, so it seems like that there's a good bit of overlap with the big business banking and the tech platform that they've already built and they're using. So,
Mhm.
but yeah, this was interesting. So along with this, I received, even though I unsubscribed from a bunch of different emails and notifications from SoFi because it was just too much, guys. But I still left on some just because I want to know about new products and things that. And so I received over the last 2 days a ton of emails from SoFi. I think like 4 or 5, despite unsubscribing for a bunch. And 2 of them seem to be very focused specifically on growing my business, which it's you already have these loans available, and so it's more focused on that side of things. But
Mm.
just based on the wording of that, along with noting this, along with what Noto said last week, I don't think this is going to be one of those things where it's like, yeah, we'll have our business banking and we'll kind of mention it here casually, and maybe in like 16 months we'll actually launch something. I think that this is coming sooner rather than later. It wouldn't
Mhm.
surprise me within the first half. Now, with the credit risk hiring, that's a key role there. So I don't think that this is necessarily like that they're like right there ready necessarily to launch small business banking. Maybe it's big business banking first, small business right behind it or something like that. But I don't think that this is going to be like us waiting forever necessarily. So, and it's very accretive for SoFi, very important like in the business.
Yeah. Nick says small business banking is big business for banks. Small business accounts can make a lot of money because there's a lot of financial services that small businesses need. And that's absolutely it. Like if you need a sort of central nucleus to manage your entire business, there's third-party solutions, but there's no real, I mean, there's it's difficult to find third-party solutions that also can offer you unique benefits that are powered through the vertical integration of having a nationally chartered bank license. And that's one of the competitive advantages that SoFi could have. One other stat is the headline total addressable market for small businesses in the US is about 118 billion. There's about 33 million small businesses in the US. 99.9%, Roy, of all US firms are small businesses. And so, and the other thing is like large banks, traditional financial institutions like the JP Morgan Chases, the Wells Fargos, like they're actively pulling back from lending to small businesses because they're underwriting really small loans, like underwriting loans for $100,000 or even less, and that's just it's too much hassle. It's expensive for legacy banks, and I think that leaves a really important gap in the market for a neobank like SoFi, a more modern tech stack like SoFi, for them to fill. And so that's, I think, the opportunity there. It's a massive total addressable market. Now, if we throw up the job posting, there's a couple of interesting nuances here. I should make a video on this actually. Maybe tomorrow I'll have the time. Yeah, okay, this. I cannot read this in my screen.
Okay,
But I I highlighted a few points here, and basically this is the job description. So the role says we're seeking a seasoned credit risk leader to develop, oversee, and continuously improve the risk governance framework for small business banking products. So this is the person to essentially determine what the framework looks like. Like, hey, what are the risks we're undertaking? Is this going to be profitable for us? Like, how would we approach it? Like, what is the plan essentially? Like, this person determines the strategy around going after a small business so that they can establish the plan, the tactical approach to launching this product offering. It's absolutely a prerequisite. Now, the uh, the role also highlights some requirements there. So SBA loans, SBA standard operating procedures, SOPs, SBA Small Business Administration. These are government-backed loans that are exclusively for small American businesses. You need to hire an expert in this specific subset. So SBA standard operating procedures. You don't need that person if you're doing just sponsor banking for fintechs, if you're partnering with others to do this, or if you're referring out. It confirms SoFi has their own plans to originate loans directly to small businesses in a very meaningful way because they're specifically in the job posting asking for these very unique skill sets for this role to have. Oops. Here we go. So that's one thing. The job description also lists out specific products that the role is going to oversee, highlighting merchant cash products. So small loans based on daily credit card sales, which is used a lot by restaurants, for example. They highlight business checking. They highlight business credit card. They highlight equipment financing. So loans to buy machinery, vehicles. These are all sort of small ticket items or small business items that are very much indicative that this is exactly the direction that SoFi is going to go in. They explicitly ask for small ticket lending segments. It's the opposite of big business banking. And so I think business checking, business credit cards, all of these are like the natural first step. But I think they're going to go much deeper into this. And this is going to be one of my 2026 predictions because I'm making that list right now because like the writing is on the wall for this. It's like a layup, I believe. Now, it could be drastically wrong, but all roads point to that.
Yeah. I think that you're right, and that was a really interesting way to break down the post, and I appreciate you doing that. Can you throw up Steve in the Mountains post 637? He said, Roy, would you prefer that SoFi not get involved in the prediction market, or would you welcome that? I feel like the predictions market isn't the way to get your money right. Your thoughts? I'm Robinhood shareholder. I've always seen it as accretive, although it's a lot more accretive than I expected. And by the way, I do have like 2 Robinhood posts that came out that I want to show maybe like after this. One's related. But I've always would have preferred that they was in a separate app. I know that it wouldn't do quite as well otherwise. But one of the differences, I guess there's 2 differences between Robinhood and SoFi as it relates to that product. Well, maybe 3. One is, as far as like the engineering team and core, I think Robinhood's is a lot more capable. No offense to the SoFi guys, but like these guys launch products left and right, and they can handle that. Versus if SoFi did dip their toe in, I don't think they would do nearly as much on that. Now, the second and even bigger and more important factor is if you look at the client base. With Robinhood, users are known as being a bunch of degens. And so, Tevis, we would welcome you as one of the fold once you get Robinhood up there. But I mean, like that versus like SoFi investors, like you didn't even have level 1 options. You're not like doing YOLO degen anything. And I think, some of that's a little bit skewed. But I mean, the reality is the predictions market itself lines a lot more up with the user base and the type of clientele that Robinhood seems to attract versus what SoFi. So even if all things were equal and they'd launch at the same time, SoFi would not benefit as much as Robinhood just because it fits that ecosystem so well. The other is, as far as Anthony Noto, like he's made it very clear, I feel like, that they're not really going to get into this. Now, I don't think it's necessarily like that they've drawn a line in the sand and said, we'll never do it like public CEO, Life Abram. If public ever goes into predictions market, I'll be like, okay, they were just fibbing, or there's obviously a price that they're willing to compromise their values. But no, I think here, like they've made it clear that this is not something that they plan to go into. I do think most brokerages, most of them have talked about or are launching their own predictions market because they want that money. But I think Robinhood is uniquely suited to benefit from that. Not that the others won't benefit, but would it shock you at all, Tevis, if SoFi gets into the predictions market, and would it change anything for you?
First of all, let me start off by saying that prediction markets is becoming a bigger and bigger reason why I'm enjoying being a Robinhood shareholder, because I agree that SoFi has backed themselves into a corner with their mission statement that will hinder them from entering prediction markets without seeming like they're, reneging on their promise to get your money right. And so as a result, Robinhood, I think, will capitalize. Prediction markets is going to be huge, man. If you think about, like, I see on the Ethereum blockchain every single week, I see the tokenization initiatives that are done. And then we saw the CFTC as well. We saw all of these major exchanges, like the entire plumbing of the US, of all markets globally, trillions of dollars that flow through in volume. They all want to tokenize. They all want to go through the blockchain. And so, okay, will SoFi do it? I already said I don't think they will, because it goes against their mission statement. Now, the public question is an interesting one, because it's like you found gold, everybody in the area, and then a couple of states over is going to be rushing over to mine that gold as well. And the prediction markets paired with tokenization is like this newfound gold, in my opinion. And I think everybody is going to want to capitalize, even if they're a pure fintech play, a traditional financial institution, or a crypto wallet, whatever you are. I think you're going to want to tangentially move into that business. The gambling sites, especially like the DraftKings and FanDuels, because of the opportunity there that's yet untapped. It's this massive global opportunity to have this 24/7 product offering across different jurisdictions. I think if SoFi did do it, how would I feel? Well, I think I think Bob said it nicely here. I would move my money out of SoFi, but I would buy more shares. And
Yeah.
I agree, man. Like, I'm a shareholder of SoFi first and foremost, and sign me right up for that. Not as a user necessarily, but maybe even as a user, if the product offering is comparable. But I think, like, having an ethical point or a discipline, let's say, that's standing in the front of you and making a crap ton of money is respectable or stupid, depending on how big that opportunity ahead of you is.
Yeah.
And I'm asking this question. I sure know that they are.
And I don't know how to say their username, PBHAKTA80, mentioned Gemini. Gemini recently, week and a half ago, maybe a week ago, announced that they're getting in the predictions market as well. Of course, best known for their credit card as it relates to crypto. But yeah, that little pump didn't last long. That the market, I think, with new entries, like Robinhood had such an advantage anyway, but also it just was a natural pairing, and I should have been more bullish on it at the time versus like the others. Gemini, Coinbase is getting into. I mean, everybody's CME, FedWatch is getting into predictions market, or at least looking into it. So,
but that's a crazy thing. It's like if the referees are saying, "Hey, we now want to play the game as well," and like, "Hey, we want to take a part of this," that's just a wild place to be, man. And Robinhood, I think, has a mission statement that allows them to be more flexible, like this idea of like, oh, we're going to democratize the playing field for everyday investors. And that could apply to equities, that could apply to crypto, that could apply to prediction markets, or anything sort of in between. Like, it doesn't stop them from entering any specific space. But it's like SoFi's mission statement is like, hey, smoking kills you. And then we're asking them to become a tobacco brand now. It's like,
yeah,
well,
yeah, I don't see it ever
yeah.
happening. But I think that some of those that have been a little bit slower, they'll see the potential, they'll see the money, especially as more regulation gets clarified. Some of these lawsuits, and the lawsuits, by the way, are not just one direction. Like Coinbase, I saw filed a lawsuit because I think it was Michigan, and the gaming commission was trying to prevent that launch in Michigan. They're like, well, this isn't gambling, it's predictions, and that argument's out there. We'll see how it does. And it fares.
Argument, but it is what it is.
Well, yeah, legally it can be true that it's not gambling product versus like practical use. It's like, yeah, I don't know about that. So,
yeah. I would welcome them to do it. I don't think they will. I don't think it's even, on the horizon for them. I think that SoFi's management thinks that they can get way more money on the institutional side than on the
Yeah.
retail side.
Oh yeah. There's a
And
great opportunity
if it's like, hey, this ocean is very plentiful, you can catch a lot of fish. You just need to reach in and scoop up one. It's that they're like, hey, screw it. Like that's great. We're also playing in this other ocean, and it's equally as rich. And that's the institutional side of things. Through loan platform business, we see the total addressable market there, especially if they expand out of their credit box and out of the unsecured personal loan offerings and into student loans, which I think they will do in 2026. So I don't think the FOMO factor from a management perspective is as large as we might think. But at the same time, I guarantee you that if prediction market press release pops, stock is also going to pop like 10% on that day, because everybody can. You don't need to be a 150 IQ genius to understand the opportunity here. People are naturally wired to be risk takers, men more than women. And there's a lot of people in the world, and they all have these little things called smartphones, and they all have money that they can afford to lose or even not afford to lose under the guise of I'm going to make it big in a very get rich quick type of way. Okay, I can understand that and be freaking 60 IQ. And so it's just like if they release that press release, then yeah, exactly, for dopamine. Perfect name for dopamine, says low IQ gang. Exactly, man. It's like, hey, man, there's money here. You just have to pick it off this branch in this infinitely growing money tree, which is the prediction markets.
Yeah. All right. So kind of related. I wanted to share one Robinhood post and then go more up to the, excuse me, macro.
Less.
Thank you. Here is an update on Robinhood's banking product. Now they announced this, of course, at their San Francisco event. They're rolling out their banking. 10,000 funded customers have deposited over 100 million. The 100 million is not that impressive, but it's a start. 10,000 again. This is rolling out like some of the other Robinhood products as well. But yeah, they're not a bank, but they are partnered with Coastal Community Bank as well. So that's one of those things, like going back to SoFi, of I don't think that Robinhood banking is like a threat to SoFi, but there's a lot of institutions that are, have applied for a lot of banking licenses. Not Robinhood. Robinhood's happy to partner, and I think that's the right approach for them. But I shouldn't have closed that. Sorry. But I'm kind of wondering if there's going to be a narrative towards at some point next year, just because so many are applying, that not just SoFi, but many of the banks actually come under some pressure as it relates to their share price, just because there would be this narrative that builds, which I think would be completely wrong and backwards, that banks are no longer cool because everybody's applying for them. There's way too much competition. But I mean, it kind of will miss that there's a strong differentiation between the banking charter and license that SoFi has and all these other companies, including PayPal, by the way, are applying for. So do you think that narrative is? Yeah.
I made this post. I gotta scroll to find it. Yeah, here. Hold on. Oh man, how do I share this? Yeah. Can you see this, Roy?
Yes.
Coinbase, stock trading, rolling out in the US. I said, give enough time, everybody is going to become everything. It's like you have these four sort of bubbles in the Venn diagram. And whether it's you start, I keep doing that. Whether you start in crypto and you expand to banking, or you start in crypto and you expand to prediction markets, or you start in prediction markets and you expand into, what else did I say on there? Yeah, stock trading. It's just like everybody's going to become everything. And it's going to become this sort of like Chinese super app, except there's going to be 4 or 5 of them. And it's going to be the Coinbase Chinese super app that has all of the above, the Robinhood one, hopefully the SoFi one if they do prediction markets, but I don't think so. But you get my point. It's like, again, back to my like stupid analogy, like you see that there's money to be made here and you have no ethical dilemma to go chase that money because it is so rich. Of course you're going to go chase it. It's your prerogative as a for-profit company in the capitalist system we live in to go chase that money. Get your money right.
Yep. Speaking of Chinese companies and
Yes.
super apps, by the way, I do think that like you're right that every fintech out there, until they stop dreaming or they find like such a compelling niche that they're like, we just have to focus on this. I think all of them at least start out dreaming to be that everything app, that super app, and some end up saying, okay, well, this is actually a niche, but maybe they always want to keep that on the table. So this was
If
mentioned
I
by. Go ahead.
if I could make a crazy prediction, like what's one out of pocket prediction that you can make, Tevis? I would say like DraftKings starts to offer stock trading through, tokenization in 2026 or 2020. Like that it in some weird
Maybe.
way that is feasible in my head.
I think that'd be a hard pivot for them, though. It's a lot harder than Robinhood for predictions market, but we'll have to see. Yeah, same with Coinbase. Like we've seen, well, even Robinhood themselves, they've tokenized stocks, and there's a great chart on Dune that kind of shows the progress of that. But it's so small to us. Now, they fit their goals. They've exceeded those as far as the number of tokenized stock, but the volume is so tiny. It's so early. I think that it's years and years and years away before that even possibly becomes meaningful. But we'll have to see.
So one thing, actually, this is such an interesting conversation, man. I really like this conversation, and I'm feeling wide awake after my nap. I don't think necessarily that SoFi will get into prediction markets, but I do think that they're going to get big into tokenization, particularly tokenized real estate. I think that's going to be a
Yes.
area of interest in maybe 2026, maybe 2027. I think 2026. I'm going to have that as one of my predictions. I just thought about it. But I think tokenization as an offering a marketplace like private equity markets, but for fractionalized alternative assets, I think SoFi can get into that without ethical roadblocks. I think they should get into that. I think they will get into that, just given enough time.
Yeah, I don't have an issue with that at all. So let me show you this just so you can actually see what I'm talking about. This is on Dune. You can look for Robinhood stock tokens. It was built by Entropy Advisors. So they're right around 2000. I think 2000 was their goal for assets that are actually tokenized. But you look at the actual value of what 13 million in stocks. Is that a lot? Not even for a guy like Tevis. I mean, like Tevis could have that and more as a billionaire. Just kidding. But you can see, like, the volume is, this is, by the way, total volume. This is not, showing that volume just continues to ramp, I believe. Well, actually, no, that wouldn't be the case. But yeah, it's taking a while. By the way, the number one symbol that is tokenized is MSTY, the preferred option, or yield max rather, for MicroStrategy. So
Number 3 is BMNR.
Yeah. Yep. BMNR. Gotta love that liquidity. So anyway, that wave is coming, but it's like agentic commerce, and PayPal talks a lot about that. The problem is anything like tokenized stocks or agentic commerce is probably several years out. We don't know exactly what that's going to look like, what the demand is, what the product looks like as well. So it's hard for analysts to look and say, okay, this is accretive. Here's the share price as well. Most aren't able to do that anyway. So one thing that they are able to do, though, is look at something like the news that we got out of China and say, okay, yeah, this is immediately accretive. And so this is from Wall Street Agent, but ByteDance, better known as TikTok, plans to buy 23 billion or spend 23 billion in AI push. And so it's 21.6 billion right there, with 12.2 billion of the 2026 budget aimed at that. And then this was separate, but there's a couple of pieces on this. It's one of the reasons why actually the S&P 500 and NASDAQ was trading up today, was just because of the strength of NVIDIA. But the sources said, and there's enough smoke there that I think that this is, legitimate, that China could buy, or BitDance specifically could buy 20,000 NVIDIA H200s. And, I saw separately rumors that said 40 to 80,000 that they expected to have shipped by Chinese Lunar New Year, which is in February. Related to that, the U.S. announced that tariffs on Chinese semiconductors will be 0% until 2027. So it's a good day to own NVIDIA. It's still like ridiculously undervalued, I think. But the neat thing about NVIDIA, as far as like revenue and expectations, none of it factors in any kind of Chinese growth at all. So We'll have to see, of course, what this actually looks like. And it keeps the frustrating thing is it keeps changing like every other week. But what do you think as far as the impact on the overall market, since you don't own NVIDIA necessarily there, Tevis?
Look, I think it's obviously bullish. No tariffs is good tariffs. From the sentiment perspective of the market, guys, don't crucify me. I also was baffled at this. Did you read this post?
Yeah, I was like, I'm not even going to read that on air.
GDP was up 4.2%, and anyone that disagrees with me will never be Fed chairman. I want to have a market the likes of which we haven't had in decades. I said, look, probably not healthy for the underlying economy, but my quant over here wants to send us all to Valhalla in 2026. How can you bear it? How can you be bearish on a market where literally the president is like, I want to pump you guys to all-time highs and then some. And by the way, the market did hit all-time highs, I think, today. My portfolio didn't because I'm heavy BMNR and NBIS, but my point is yeah, I understand there's all these real fears in the economy. I'm not discounting those real fears. I think they are actual fears. But at the same time, you're going to have a very aligned incentive structure between you and the administration. And I mean, we know by investing in stocks where management has their own performance units, like SoFi or like Tesla, it's very good as a retail investor to have your incentives aligned with the people that can actually make that change. And now you have it with legislatures, with regulators, and we saw how fast they moved on crypto. The OCC immediately, as early as February, started making moves, and SoFi got it back up and running by November. So my point is if he goes to make zero tariffs on China strictly just to pump the markets, he's going to do that because that's one of his main things that he cares about. So I expect whatever pressure is artificial pressure, and this is where the taco thing comes in, because now it's okay, well, he's shown his hand that he wants, he cares what the markets are at, and he cares what the underlying economy is at. So he's going to be incentivized to make those numbers come to reality.
And this is one of those figures that I think helped move the market today. From quarter three, there's always estimates, but U.S. quarter three was 4.3% GDP versus 3.3% expected. Significantly stronger. You can see where it stacks up. Of course, this was the one negative print that we had because of the tariff noise, which this is all kind of factors in together as there's more and more deals that are made, as there's more and more pieces of we're going back to this 0% tariffs on Chinese semiconductors, opening up trade between, the NVIDIA can actually sell at least some chips into there, rare earth agreements, those sort of things. That helps avoid future things like this. If you recall the Trump agreements with China in his first term, a lot of those stuck and remained. And so I think that, we'll continue to be maybe not at 4.3% every quarter, but there's a lot of growth on the horizon. Not everything's perfect. There is some weakness, especially in the lower end. But one of the other big factors, too, is the mini stimulus that's coming, not in the form of actual stimulus checks, but just refunds for U.S. consumers. I actually re-looked. It was Piper Sandler that in early December, they ran some estimates, and they looked at, and there's a kind of a wide range that they put out there, but I'll just say about $1,500 would be the average additional return beyond what would be expected for American tax filers, which is pretty substantial, especially if you're looking at individuals versus, I can't remember actually if that number was individuals or household. Double check me on that, chat. Make sure that I'm not putting something out there that's not necessarily true. But the range, I believe, was $1,000 to $2,000, which, again, people spend that naturally. It'll help those that are perhaps a little bit stressed more too. But
I also saw the one with the military personnel, right? Everybody got 1776 deposited into their accounts as a Christmas bonus. I saw posts on Twitter where people were showing their bank accounts if this had been deposited.
Yeah.
So hey, what do you think is going to happen? What do you think they're going to do with that money? They're either going to YOLO it into BMNR like they did back in 2020. They YOLO'd it into small caps, and then liquidity was back, or they're going to start spending it, in which case it's going to show up in the earnings reports. So, I mean, okay, we're talking about short-term 12-month events here. We're not really talking about the long tail repercussions from an economic perspective around these events. That's a different conversation for us to have. One thing I will add here that Michael Anthony highlighted, because a lot of people are asking why BMNR is still down. It feels like weeks that it's down, and other high beta names. I will remind you guys that a lot of the sell-offs that you get this week, or even this month for that matter, is tax loss harvesting, where names, unfortunately, that have been beaten up are going to get beaten up a little bit more in December because people are selling them to harvest losses, and they're going to be presumably getting back into those names in 30 days to avoid that wash sale rule. And so that's how I saw it. And that brings an interesting dilemma. It's like, well, names that have been undervalued, quote unquote, I think are going to get more undervalued before they start turning around. Roy, anything there?
Yeah. I mean, like, I think maybe we'll pivot to BMNR like specifically, but that was actually one of those. I don't know if you saw this engagement a couple of days ago where people were saying that Fundstrat was contradicting itself and had lied and had lowered all their price targets and everything. And did you see all that drama and dilemma?
No,
So
well,
I
I did. I saw. I covered it in the BMNR weekly recap. I also saw Tanner's video. Great video, by the way, Tanner. If you're still here watching, where like Tom Lee basically thinks that we're going to have a 10 to 15% drawdown in H1 26, and they're revising their Bitcoin target to their clients as like 60K. This is what you're talking about?
Yeah. So there's like three different ways that they look at it. It's sort of liquidity and cyclical, which is Tom Lee, the narrative. You have the TA, the guy that is looking, he's like, structurally, it's not great. You have the guy that's like a dedicated crypto guy as well, and he has to factor in a lot of risk. And so I think that their portfolio is like half stablecoin, essentially cash. Well, that's awesome. Congratulations.
Yeah, what did he say, Tanner? Was he like, hey, man, stop talking shit?
But yeah, like tax loss harvesting for sure is happening. But I think most of that usually before the last week of the year, although there still can be some, it's usually more of a late November, early December type of thing. So, but yeah, we could for sure see more pressure on that. Now, one interesting thing for BitMine, if we can put this post up right here. So this is from the update on Monday. Of course, they hit 4 million ETH, which is awesome. But they said making rapid progress to the alchemy of 5%. This right here. We are already seeing the synergies born from our substantial ETH holdings. We are a key entity bridging Wall Street's move onto the blockchain via tokenization, and we've been heavily engaged with the key entities driving cutting-edge development in the DeFi community. Short on details, but that was pretty tantalizing, Tevis. What did you catch this, and what do you think that this might signal for BitMine?
Yeah, I mean, I don't think. Well, I think a couple of things. So in January they have their. Sorry, January they have their. I don't know why I keep doing that. Their investor day on the 15th, I believe it is, or 16th, and
yeah, the shareholder meeting.
Yeah, so the CFO is going to see them through to that. When the CFO resigned, his last day is, I think, the 16th. So that's one piece.
Yes.
So the second piece, which I thought was interesting, was he mentioned into one of these podcasts that it takes 70 days for them to essentially get into staking in their Maven validator network. And we know that that's something that they've been testing. They've been doing dry runs with small amounts of ETH to see how it would work. And we know that that's something that they can potentially white label to others to use that same network. And of course, they would, as a provider, get a little bit of that cut. So I think we're going to get announcements in January, not only about the 5% accumulation target and what Tom DeMark and the market timers suggest that they do with their purchases, whether they ramp up or down. I think the purchases are also telling. Like if they stop buying right now, then obviously they think it's going to go lower. If they start buying 200,000 ETH versus 100,000 ETH, and then obviously they think this is like, the bottom, quote unquote. But yeah, Tom, the market timers. But the Maven network announcement in January is really what I'm expecting. That because it takes 70 days and because we know that they've already been testing, I think they could make it where they say, hey, I know we said Q1 2026, but it's actually January. We're staking right now. We're going to produce however many millions of dollars, and here's what exactly we're doing with that extra money. I think that's going to give a meaningful boost to stock. And we can talk about, like, because there's questions and we're going to cover them in the question period, whatever, around BMNR specifically. But that's like near term, next 30 days, what I'm expecting to happen.
Yeah, that makes sense. I love, kind of as we like go into the new year, there's a lot of stocks that are like that, where it's like really exciting opportunity, something new that they're building. We'll have to see what it actually looks like when they launch it. With SoFi, the business banking, you have that with BitMine. You have some question marks, more question marks, I think, than anything with HIMS. Robinhood's launching. It's awesome. So, let's see, we have a couple of things that we can still talk about too before pivot to comments. You'd mentioned Ackman's SpaceX proposal, which I've actually not seen.
Okay.
I've heard about it, but I've not seen it directly. And I looked under his profile, I didn't see it there. NBIS, and also we can talk about the Tim Cook and Nike if you want to. But
well, let's just knock off Tim Cook and Nike real quick, and then I'll find the Ackman post as you do that. So Tim Cook, CEO of Apple, bought about $3 million worth of Nike stock. I don't know what you have up, Roy. Is that it?
It is, yeah.
All right. Tim Cook is, I believe, a director of the company in Nike, or like he has some type of position in Nike. But is there anything else that we want to add there, Roy? Like, is Apple buying Nike? Oh my gosh.
Well, no, it's not Apple buying Nike. That would be weird. Actually, really weird. I'd have a lot more concerns with Apple if that was the case. But I mean, they can afford it. That's
I mean, they tried the phone stocks, so now they're like, you know what we should do? Become a full retail company.
Yeah, we'll see. But I mean, there's a lot of people that are heavy, well-known, and this is interesting. It's a CEO too, buying large stakes in Nike as well. This is one I looked at. Was it a year ago? Maybe a year ago or so, and I was interested in learning more. Looked a little bit more, and I decided, I'm going to let this one go. I'm not going to get into it at all. It worked out pretty well. But for you, Tevis, are you interested in Nike at all, or are you just saying? Yeah, apparel's just tough. Like Lululemon, I swung traded, lost some money, hit my max loss threshold, got out. And popularity can fade over time. And the hard thing with Nike is like there's this transition that's happening with the new CEO, which old line companies like this, it just takes a long time. So turnaround plays. I don't want multiple of those. I already have one with PayPal. So, and that has been painful.
Yeah, 52-week low with a 2.86 dividend. What's their PEG ratio?
Yeah, I'd have to look it up. I don't know.
Yeah, I'm sure Tanner will have it like memorized. So somebody in the chat can help me, because like the PEG ratio is there to protect you from value traps, guys. All right, I found the Ackman post. Let us pivot to that, unless there's anything else on Nike.
Yeah, let's pivot.
Okay. PEG ratio 2.24. There you go. This is why 52-week lows and 2.86 dividend is because they have a 2.24 PEG ratio. Generally, you want this under 1 or even under 0.5 is fantastic. But under 1 is generally good. And that means that their price to earnings is smaller than their growth rate. I think I have that right.
Mm-hmm.
Okay. Bill Ackman. Bro, if I hadn't done that nap, I would be toast right now. Okay, I can't see you, nor can I see the chat or anything else. I can only see this screen. So you're going to have to pause me as I read. Okay, Ackman posted this on December 20th, just 3 days ago. I'm going to read this, saying he tagged Elon, saying, what if we took SpaceX public by merging it with Pershing Square SPARC Holdings, ticker symbol SPARC, which probably pumped. I haven't seen it, but we can take a look at it after. a new form of acquisition company that was approved by the SEC. We could distribute Spark Special Purpose Acquisition Rights, SPARs, unnecessarily convoluted, to Tesla shareholders, so that all Tesla shareholders would have the right to invest in SpaceX IPO, or they could choose to sell their SPARs to someone else. So basically, this is just a vehicle. It's like a blank company that they can merge with actual SpaceX, and the blank company shares, which have no real value, once merged would be SpaceX. And this way, me and you can buy the blank holding company, reward loyal Tesla shareholders with the opportunity to invest in SpaceX without necessarily the bankers, sucking all the juice dry and then us buying it at a $2 trillion valuation. In addition to receiving common stock in SpaceX, exercising SPAR holders would also receive Pershing Square Spark Holdings 2, which we could use to take XAI public. Now, Bill is like, may I meet you, but in the business version, because he's really pushing his luck with this one. At the time of your choosing, I think XAI is probably going to get merged into Tesla, or Tesla's going to acquire them. Hot take, I don't know. He continues, Pershing Square would due diligence on behalf of all shareholders and would commit $4 billion of capital to the IPO at a fixed price per share. Spark has no underwriting fees, founder stock, and shareholder warrants, and we would waive our right to receive Spark sponsor warrants. The result would be an IPO without any underwriting fees or dilutive securities issued. SpaceX would go public with a 100% common stock capital structure, and it would not incur any transaction costs other than a modest legal fee, which is multiple millions of dollars, which Spark would pay from its cash on hand. We could raise whatever amount of capital you like by adjusting the exercise price. This sounds like me when I'm asking Anthony Noto to come onto the show. We can make any accommodations you want. Just please come onto the show. Assuming we issue 0.5 SPARs for each share of Tesla, that'd be 1.72 billion SPARs outstanding, including 61 million SPARs we already have outstanding. Blah, 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 blah. Okay. If we set the SPAR exercise price at $11, SpaceX would raise 42 billion, 38 billion from the exercise, and 4 billion from Pershing. If we set the SPAR price at $42, you get the math. Spark is indifferent to how many shares are primary. We could do diligence. Okay, 45 days, at which point it would be certain that SpaceX would go public at a fixed valuation, subject only to SEC approval of a merger proxy registration statement. We could start working right away and announce the transaction by mid-February. It only seems appropriate that the most innovative and efficient rocket company would go public through my holding company to Mars and beyond. Sincerely, Bill. I also saw this, which was fucking hilarious.
Yeah.
So, okay, let's share our thoughts.
So yeah, I would be a little bit surprised if it happens. It is a quicker way to going public. It's not quite a SPAC, but it's basically that route. So somebody saying Chamath is salivating at this. You're like, probably, yeah. Ackman, of course, would love to have a piece, and no matter whether they do IPO, I haven't seen any rumors, but if they did DPO, like whatever they do, or if they go this route, there's going to be a lot of interest in this one too. So
yeah.
Now Hackman at the end basically makes a plea. He says, "Oh, we want to do this in the most equitable way for Tesla shareholders." I think he's looking out for number one, not really too concerned for other Tesla shareholders. So
okay, let me just put it to you this way: this is the richest mofo in the entire world, $750 billion. No, he's not going to respond, Mary. He's not going to respond to that, and this is why. Because this is the richest mofo in the world. What is stopping him from creating his own blank freaking holding company and just doing it through that? Thanks, Bill, for the great idea. I'm going to do it through my own holding company and not be beholden to any external factors at all. Sincerely, Elon. It's just, what is the benefit that this honestly, literally sounds like me pitching Noto. Please come onto the show. We'd love to talk to you, and we'd make any accommodations. And I just get ghosted. And in the same way that Bill, I think, is going to get ghosted here, because he's not really offering a lot of value to Elon that only he uniquely can give. It takes 3 to 6 months to have us. Who cares? They already want to go public in 2026 anyways.
Yeah. And I'm sure they have, a lot of people lining up and saying, please use us and let us help you IPO. SpaceX, other than like OpenAI, if OpenAI IPOs next year, SpaceX will be the largest and most in demand IPO of anything. And it won't even be
Yes.
close. I think Medline was the number one of the year so far, and like this just would blow that out of the water.
Roy, can you imagine? And this would be like, so Elon always says the most entertaining outcome is the most likely. And so now I immediately think that this is going to happen. But can you just feasibly imagine the death knell it would be to all of these bankers that the largest private company in the world actually did a direct listing or a SPAC listing to go public, and them just like seeing their faces completely drop because they can't take advantage of those exorbitant fees and taking advantage of the public on IPO day by mispricing everything, which we've it's like a running joke at this point. Like, I just think that would be poetic justice to the entire system. And that I think Bill was on to the right mechanism, but I think Elon can just do it himself.
There's a little known company, I don't know if you heard about them, that did a DPO back in I believe it was 2021 January. It had been December 2020.
Company that starts with P and ends with Palantir.
Yeah, Palantir.
Yeah.
It's rarely done. The nice thing about that is, like, the problem with IPO, and Chamath like even called it out, which is a little bit ironic, but it's more like so that he could defend the SPAC thesis of like why that should be a viable way to become public. But in essence, like, the IPO structure is skewed to help institutions and help people that were in there on the ground level, not us retail. It's not made for that at all. IPO access is nice, but ultimately the DPO is, it's saying forget you guys as far as all the banks and everything, all the institutions. And that was one of the reasons why, there was I think it was one of several reasons why there was some hangover on Palantir stock after that initial pop all the way up to $45 a share. Then it came crashing back down. Was, some really took it seemed like almost personally because of the DPO. I think because Palantir has paved the way, and it's also like a fascinating, exciting company like SpaceX, I don't think SpaceX would have a problem if they did DPO. I've not heard any rumors, but it would be kind of amazing if they did DPO route, and I would be buying a bunch of that. Versus like IPO, it would be so overheated. I might ask for like some shares and get like one through IPO access, but other than that, like, I'd just be on the sidelines.
Think about it like this. In previous interviews, I can't remember, it might have been like 2020, 2021, or maybe 2022 when they were asking about SpaceX going public back then. Elon basically tweeted, I remember this like it was yesterday. Elon basically tweeted, he said, there's no real utility in SpaceX going public because I lose a lot of, like, I have a shareholder board to be beholden to, and we don't really need the financing. So I'd rather retain the control and keep doing the Mars thing. Mars is not going to be a capitalist venture. It's going to be a sort of mission-driven, company, and we're not going to see a lot of profit. Once we launch Starlink, we're going to think about it, or maybe we spin off Starlink. This was like Elon said this. Who is the guy from Super Troopers? Hi, my name is Travis. Nice to meet you. Welcome to my channel. So lo and behold, they did launch Starlink. It started making a bunch of money. And now, for whatever reason, data centers in space or whatever speculation you might have, they are going public. Okay. Elon did say back then that he wanted to find some structure that is favorable to existing Tesla investors for basically being a part of the ecosystem. What if they could organize it in such a way where, all right, here's a form, and if you could verify that you are a Tesla holder, and then B, will stack rank Tesla holders by how long you've held Tesla, that gets you a higher spot in the lineup to get shares. That would not only be fair to Tesla holders, it would also pump the hell out of Tesla stock, because if I want to get SpaceX access, that's not 3x higher than the next guy. I'm going to buy some Tesla stock and I'm going to submit that form. I don't know what the legality is, but this is a way that I'm thinking of that he could do it to fulfill his initial intention of having Tesla shareholders benefit, because Tesla has been a high beta name. It's been up, down, and sideways for the last however many years. And so he's like, hey, thanks for investing your time and effort and money with me. here you get preferential treatment for my next one.
Yeah. Yeah. The other way they could go about that too is just say, okay, we're going to partner with Robinhood and tokenize the stock. But I don't think Elon would do that necessarily. It seemed like that he had some concerns when initially SpaceX and OpenAI were tokenized. Robinhood gave those out for free to some European wallets out there. We didn't have access, sadly, but yeah, there's a lot of vehicles out there. He doesn't have to use Pershing Square at all. I think it'd be unlikely, but I think that we'll see it public this next year, which is really exciting. So, pretty high valuation though too. All right, one last regular piece of news, and then we're going to pivot to question and answer. This is from NBIS. I've still maintained and just on the outside looking in on NBIS, but this is an update on basically the Missouri data center play with a couple of dates that were announced right here. And so we already know, because they filed permits and everything, that they're building a data center there. There's not necessarily a formal announcement yet, but that's probably what this is. So NBIS plans to conduct an open house on January 12th in Independence. The Independence City Planning Commission meets January 13th with the expectation that the data center project will appear January 20th on the full city council docket. And so, and this kind of sets up the timeline as well. More in that article if you're interested. What do you think? Is this one of those things, Tevis, that it's a piece of news that's not necessarily going to pump the stock when that's announced, or are those dates meaningful and significant to you? How are you playing this?
Yeah. So if I'm thinking about why this is important, is because it speaks to the capacity ramp for their business. The capacity ramp is a key driver of the input models of what we can feasibly expect the scale of the business to be. So this is like, I have a lemonade stand. I'm looking at new locations for new lemonade stands. It's going to really materially change how much lemonade I end up selling next year, if I can get it or if I can't get it. Cool. All right. Now, that's why it matters. The reason why the stock hasn't pumped on this is because this is not official news yet. They're still looking for different sites of the lemonade stand, right? And what gives me confidence is one key question was answered here. That is that this is in fact NBIS, and this was confirmed by the city council, the commissioners, the independent, like the site itself on the other side of it. So I know we've had speculation about other sites like Alabama, and we've had Alabama, Missouri, Indiana was the other one. There was also something about Dallas, Texas. And the reason why, and I'm actually going to bring up a spreadsheet that the user, I reposted it today, and it was very good. Here, I'll bring it up right now. And the reason I reposted this was because this user is basically keeping track. And I know somebody always asks us on stream, is there a way to keep track? And so I reposted this. I said, love that we're keeping track of the tentative unannounced data center capacity ramp. This is a great visualization indicating the scale ahead. If and when these projects are confirmed, which I believe to be soon, imagine where NBIS will be trading if these projects were confirmed today. And so as you can see here, this is Finland, Paris, Kansas City, Iceland, UK, Israel, so on and so forth. And you can see the quarters here, right? This is 2026. All of this is 2026. So this is like, if these are, like if Missouri does actually come to fruition, this is what the build time would be, and this is what the capacity would be once it is approved, built, so on and so forth.
That's
and so
a really good chart.
Yeah, exactly. It's a little cheat sheet around what the status is. Like, do they wholly own it? Is it co-located? Like with, so for example, Data One is built out by New Jersey is Data One. They also have this company Logistics, which Data One partners with. That people are looking at what Data One and Logistics are doing to say, oh, this is actually NBIS on the other side of this deal. Now, the first hurdle that we have to overcome is that we do not, in fact, definitively know that this is NBIS on the other side of this deal. But for Missouri, we do. And so for Missouri, it's like the second hurdle. And the second hurdle is, okay, will this be approved or not? Okay, and we're going to find that out end of January. And I think once this is approved, that's when the announcement drops. Stock is going to pump. The third hurdle is when is this going to be built out? How long is the building process going to take? And what does that speed to the time to value look like? And we're going to find that out also in January. So I think this is significant for Missouri because the first hurdle has been successfully passed, and we now have a date around the second hurdle. And if I was a betting man, which I absolutely am, and I wanted to do some degen shit, which I absolutely do, I would probably put some call options for the end of January. Because if this does in fact get approved in the end of January and the press release does drop, then that's the thing that's going to pump the. And the reason why it pumps the price, guys, is because the market's collective confidence that this is actually going to materialize into revenues is higher because this hurdle has been passed.
Yeah, and with the other piece that you alluded to, but I don't think you explicitly mentioned, is that they're sold out basically. So any unlock of additional capacity, like it just analysts can look at that and be like, oh, we'll add this then. Leads to a lot of revisions in the upside for EPS, although it's just going to be negative probably through 2028. We'll see if they make it in 2027. Revenue certainly, and price targets as well. So, and growth. All right. Q&A?
Yeah, I mean, well, first of all, like, does that make you want to buy more? Buy Nebius, I guess, in the first place, because you don't own it yet. You used to, and you sold it, and now you have talked about potentially getting back in. Does this Missouri confirmation give you confidence that you want to buy it again, or is it like a valuation thing? Like, where are we at right now? Steve has agreed to buy it before you. That's like, has hell frozen over?
Well, I mean, I bought it in the 20s and I sold it in the 40s. So
that's fair.
But with Nebius, like the tough thing for me is I don't have anything like a Nebius. Like I don't have CoreWeave or anything like that. I'm not an IRIN, but I have, as far as the AI trade, I'm in Palantir, with a not insignificant position. It's not crazy large anymore.
Mm-hmm.
NVIDIA, I bought more Airtest systems as well. NVDA is kind of an AI play just because of the energy space, although I don't, in my mind, factored in that. So I'm okay, like adding a little bit, in Nebius, and there is a price point where I'd be very interested in, at least for this, from my perspective, is this is expected. We know that they're building data centers. We know that they're improving their capacity. We know that that's a critical piece of them. So I don't think that this changes anything in my mind, frankly. It's already interesting here, but yeah, I've not pulled the trigger yet. This week, by the way, I bought more VG, I bought more Airtest systems, and I bought more BMNR, and that's it.
That's
Although, well, so the other thing too is like, if out of those that I mentioned, I do want to add more Airtest systems even than I added at 22. Might wait until earnings. It's one of the first stocks that I hold. I think it's the first stock that I hold actually that has earnings. This will be their Q2 earnings, and they for fiscal year. And they set up a lot of things that they said were coming in the second half, and I believe that that's second half of the fiscal year. And I don't know. Like it's hard for me, like with Airtest and where it's at. I'm like, okay, it's really attractive right here. And also NVIDIA, despite the little pump that it had, we did this, and we're not going to rehash this, but like compared to every single Mag 7 out there, NVIDIA is just dirt cheap. It should not be trading where it's at. And I know that Nebius will likely outperform NVIDIA, but I'm like, I also need more NVIDIA too. So only so much money, so many plays. What could happen, and that's one of the, going all the way back to HIMS, out of everything that I own, that's the least bullish that I'm in. I'm still bullish. And there is a point where Nebius might exceed that. Like it has to, it can't, like if I'm on a scale of 1 to 10, like I'm a 6 on HIMS or something like that. I'm not going to like be like, oh, it's a 6, it's even, or 6.1. And I'll go, no, it's like, if Nebius falls to like $60 a share, buy HIMS. Like I'm leaving you, I'm going to be buying Nebius at that point.
Yeah, wrong choice of words, but yeah.
Yeah. It's like my short list that I used to. So,
yeah. It's if Nebius falls to 60, it's absolutely goodbye HIMS for me as well. It's
Now, remind me, in our stock giveaway, did you give away Nebius? You didn't give away Nebius because you couldn't. That's right. Tanner
I
owns?
couldn't. I would happily give
Yeah.
away Nebius, but like I own it and he owns it too.
Yeah. Plus, you wanted to give him a not as nice gift because you're a good friend.
I felt bad afterwards, honestly. I kind of felt like kind of bad, but it's $100 and he can afford to lose $100 because he's like a millionaire now too. So
Yeah. So, how
billion,
did you
in
feel
fact.
about my gift to you?
I haven't bought it yet.
Well, I know you haven't bought it
I'm
yet,
happy about it. I'm happy about it. It's going to force me to learn more about it and learn all the stuff that I'd like to think I'm too stupid to understand, but I'm like just smart enough to know how to get the answers, but I just need to put in the effort. So it might be $100. It might be more, and we'll see where it goes from there. I think I'm going to be listening to the next earnings alongside you, and writing down a little notepad all the things I don't understand, and going and researching that afterwards.
So the best thing like about listening to the earnings is you get a really good read on like what's the next thing that's happening in that space. So I think it was 6 months ago the CEO was talking about Micron, like pretty specifically, and at that point I put it on the like to look at list, and then like in the next quarter, like in October, even more so, and I'm like, okay, I really need to look at Micron. Micron, like you know what it did. We talked about it previously. Ridiculous earnings in quarter. And so I'm like, okay, there's some alpha there just from listening to Gain. He's been CEO for Air for a while. The company's been in existence about as long as I've been alive. They understand their space and their industry very well. So, and not a lot of people listen to those earnings calls. So hopefully beyond just owning Air Test Systems and being a fellow airhead, you'll also get some alpha in that trade, AI trade.
I kind of want to own it just to be called an airhead now. That's added bonus. All right, Roy, you win. We can do Q&A, even though it's like 1:30 a.m. for me.
We'll do a very quick version of it. So I'll try to stick.
I'm weirdly like wide awake, and so yeah. Do you guys call yourself airheads? Yeah, we're getting t-shirts made. All right, you better be jealous. Hold on to your shitty Peloton and shut up. Okay, that's now that we settled that one, Roy.
Yeah, Tanner, you're allowed to buy Air too. If you want to buy $100 too, just to participate, you can. You could be an airhead with that low
See,
price.
like, on one hand, I'm like, you know what? I feel bad. But on the other hand, I'm like, yeah, Tanner, that's what you get for giving me stupid Joby that went up double. Okay, cool. Let's go into the question period. What did you get your parents, Roy and Tevis? I want to judge what type of sons you are.
So for my parents, it's just like the actual gift is very small. But like the bigger present is on the 31st, I'm going to go fly out with one of my kids and go see them for a few days. So yeah, I'll be there with my.
Are you surprising them?
No, it's not a surprise. They know that, and I'll be there with a couple of my brothers. So I have 4 siblings, and I don't remember the last time every single one of us has been together. There's usually one of us missing, but yeah, 2 of my brothers will be there, which will be really fun.
Nice. Okay. Tanner, stop trolling my chat. What did I get my parents? I didn't get my dad anything as of yet. I'm probably going to get him something. I usually just get him like a nice scotch or whiskey. I think last time I got him like Macallan 15 or something. I'm like, Merry Christmas. Like, have fun with this. My mom needed a new keyboard. And so I got her the keyboard that I had because I'm in love with it. It's the Newfie Air 75 V2 or something like that. Newfie Air, 75 V2 is what I have. Low profile keyboard. I love it. I got it for her. She doesn't know what to do with it. I'm like, I'll hook it up for you. Don't worry. It's great. She's like, it feels great. I'm like, fantastic.
That sounds nice. Yeah. Rod Arroyo, his comment made me just crack up. The biggest present is me. It's like, well, I mean, so like unrelated to stocks, like take some time to spend time with family, guys. If you're able to, like this week, actually, it was this week, 2 funerals of friends that I had. It was just, you don't know how long the people that you love, that you're going to have them in your life. My parents are in their 80s. They're not going to live forever. I'm like, man, I got to see them. So,
yeah. Mr. C. Chris Rodriguez says I have that keyboard. Yeah, I got her an MX Master mouse recently, and she loved it. And so I was like, all right, well, I'm just going to get you this keyboard that I also use. Yeah, Tevis is getting BMNR for his mom. Joke's on you. I already did get her that. She doesn't have the password to her brokerage account, though, so she can't really see how much she's down. Yeah. Tevis, when will you be out of BMNR? Oh man, do we want to cover the BMNR questions right now? Okay, so there's this question. I'll just cover all the BMNR questions because like there's a whole bunch of like, oh, are you guys still high on BMNR? So I'll cover that, and then I'll cover the other BMNR questions. So I think the thing that will change my thesis on BMNR is if they sell ETH, which funny enough, I don't know if you saw, but ETHzilla is selling more ETH.
Oh yeah, it's. Did you see where it was trading as far as its MNAV? It's like 0.25 or something.
Is it actually?
Yeah. Let me pull that up. I did a. Let me pull up Blockworks. I did a BMNR video like shortly before we got on here, so I was looking at that. I'm like, whoa. So yeah, here it is. This is crazy. There it is, 0.29 for ETHzilla. It's the red. Let me just do ETHzilla here. Well, we'll remove all there. Yeah, this is crazy. And it's not been above until like previously, I think it was here, and then they sold some Ethereum to try to get their MNAV back up, and it almost worked. And then the share price collapsed again as well. This is one of the reasons, a lot of people are attracted to ETHzilla, and there are some attractive things to them. But part of what I've seen some people attracted to is it trading very undervalued relative to MNAV. Now, I think that there's a trade to be made. But again, like if we're looking at actual trading volume, which is a key aspect of this, if we look at it on a percentage basis, it's all BMNR. It's ETHzilla, like,
yeah,
blessed if it hits 1%. So
yeah. So that's one reason I would sell BMNR. And I'll bucket that into like if they sell ETH / if management goes off the rails and does something stupid, or Tom Lee is no longer with BMNR or whatever, like something that's thesis breaking. And then I think the second piece of where I would sell BMNR is if I all of a sudden lose hope in the thesis that Ethereum is going to be the blockchain of choice for Wall Street. If they all of a sudden pivot to Solana, if it's like, oh, well, ETH is inferior and cannot continue the current adoption rate. If one of those two things happen, I will sell BMNR. Now, I will severely cut my position if BMNR is trading where I want it to be trading because I want to allocate those funds to something else. But I think the thesis is still solid regardless of the stock price action. I mean, like ETH is under 3,000 for crying out loud. So I'm not having high expectations. But at the same time, like I don't really have options. Well, I have leaps on BMNR, but I don't have like short-term options on BMNR because I had January ones and then I rolled them out into leaps. I paid a little bit extra, and I can hold shares for a while. I'm fine with that. I think it's going to turn around. I think they have catalysts, and I think the Ethereum in general is going to go up in 2026. So as long as the thesis is intact, then I guess we can else answer this. So do you want to cover this, Roy?
Yeah. So they can, but they probably won't. So unlike the other digital asset treasuries, which have a goal of accumulating Ethereum, they have a stated goal as far as how much they want to accumulate. And they've done a good job of heading that direction with over 4 million accumulated. That's 5%, at least 5% of the Ethereum network, maybe up to 10%. I think, if Ethereum's trading where it's at and nothing else has changed, they'll keep on accumulating maybe close to that 10%. We'll have to see. But since that's their stated goal, unlike with ETHZilla and others, which are like, okay, we're trading ridiculously undervalued, let's be defensive. Well, they're trading basically just slightly above the actual MNAV. And so to do this would actually be a colossal mistake. B, they said, hey, we're going to try to accumulate 5%. And so that would be like the first time you actually see it move in the wrong direction. And I don't think many of us would, at least unless they're trading really undervalued like ETHZilla. If they're trading at 0.25 MNAV, I mean, they'll have to look at doing that. They'll probably first sell all their Bitcoin, all their orb, and use all their cash. And if they're still trading way undervalued, maybe then, but that's going to be a hard decision. So I don't think that that'll ever happen unless there's just some extreme scenario out there like what ETHZilla has found themselves into. But a lot of that's their own fault and done by their own making. They ran out of gas. There's one other BMNR question that I see that you tagged there by Takuetsu. I'm sorry I butchered your name, but do you think that MicroStrategy strategy will work with BMNR? If he's asking like, will the companies work together? I mean, I think that they'll be at some of the same crypto events, but actually work together, I don't think so. Because Saylor is focused on Bitcoin. He does not care about Ethereum. Like, I don't think that we can say that enough. Versus Tom Lee, he likes them both, but mostly he's focused on Ethereum.
Okay. Yeah. Let's go on to the next question.
And what about like the two other BitMine questions? So Patrick Kukla said, why doesn't BMNR just buy ETHZilla outright? That is part of what they've mentioned that they might do is buy digital asset treasuries, probably close to or around their MNAV. Now, something like ETHZilla that's trading way under, maybe there's it's kind of tough. So like they could buy it, but they're not going to get it at the value of like 0.25 MNAV unless they're giving some sort of equity in return. That just wouldn't make sense because ETHZilla, if they were like, okay, we actually want out, they would just sell their entire Ethereum stake and have a whole lot more money than the entire value of their company. That would make more sense than trading way under their MNAV. So right now they're able to get a better deal just buying Ethereum, but at some point maybe we'll see some consolidation, especially in the crypto winter. Do you think BitMine starting to stake will start a run? Mike asked that question too.
Sorry, Mike. Yeah, I think it's going to be largely dependent on what the underlying asset does. Like if BitMine starts to stake and Ethereum drops to 1,800, those two things are going to offset each other. But if Ethereum, for whatever reason, pumps to 4,000 and BitMine starts to stake, it's going to be a compounding effect onto the other. I think that when they announce staking, they're going to get a pump either way. It's just a matter of how sustained is that pump really. Roy, anything to add there?
Oh, I'm muted. I don't know that necessarily starts a run. I think it's just more about like that might add a little bit in the distance to them trading above their MNAV. But main thing is Ethereum has to move. Until Ethereum moves, it's not going to meaningfully really start a run.
Yeah. Orbs was mentioned. Does anybody know what it does other than Dan?
I do, and I don't like it. The only reason why I do, or the main reason why I do, is they had floated an idea about working with PayPal a long time ago.
Is this the WorldCoin thing?
Yeah, it's WorldCoin. And so basically, it wasn't allowed in the United States initially, and I don't know if that's still the case, but they set up basically these optical scanners. And so it's very science fiction, but in essence, it's getting your digital identity that's verified based on your Oculus, or not your Oculus, your eyeballs. And in return for that, they gave you some money to do that. And a lot of people that I talked to were like, I would never especially I think it's for like $100 or $50 or something. Yeah, I'm not gonna let somebody scan my eyeball for that. So I'm curious, like it does solve one of those challenges as far as like how do you actually verify whether a person's real or not. That is a way, but man, maybe it's just that I don't trust Sam Altman, but I don't like it. I wish they would have had sold it when it pumped. They could have, but yeah.
Mm-hmm. Okay. Sorry about that. Let's go on to the next question. Thoughts on Mega Lab recent video on honey scandal? Roy, you should know this because I don't.
Yeah. Do you remember part one?
No, I know
Okay.
what honey is, and I know that PayPal bought honey. I don't know any of the parts of the
Yeah.
scandal.
So let me I'll just real quickly like kind of show you what we're talking about, so you guys can watch it on your own. I've not seen the second part. The first part, I did watch all of it. It's really interesting. I guess he just stopped doing videos for a year. Maybe there's a reason for that. I'm not sure what it is, but in here he mentioned that there's going to be two other parts. That the second part was going to be even worse, and then nothing happened for a year. So I've not watched this obviously yet. This got 18 million views and went absolutely viral. Like he's got a large following, and so yeah, it's got some views, but I don't think it's going to blow up nearly as much. Had he followed up on this like 3 weeks later or whatever, would have been a lot more traction. But I mean, honestly, with where PayPal's already trading, honey being such a small part of that ecosystem, I've not seen it, but I think this is going to be a nothing burger, honestly. It's not the reason why PayPal's trading at 59 or whatever a share.
How to get SpaceX shares early was in reference to the Bill Ackman SPAC. So yes, you could get them early as a retail investor. This is not clickbait. It is a feasible proposal that's out there. And I just want to answer this one real quick. HIMS is the first thing we talked about. It's literally our first topic. So if you rewind to the start of this video, it's the first 5 minutes.
Yeah.
Great. Yeah, we covered that. Aren't you on vacation? Sure. I mean, isn't everybody on vacation? It's the winter break.
Not Robinhood. Those guys work right around the clock, I guess.
Yeah, exactly. What top 10 banks do prediction markets?
I don't know that any do yet. I've seen one or two rumors that certain banks were looking at possibly getting into it. What aspects? Like it surprised me if they get into the sports betting at all. But yeah, right now I'd say none. But I could be wrong.
Yeah, I would say that they're getting the infrastructure set up from a tokenization perspective to allow them to do prediction markets in the future. And that is something that JP Morgan is sort of leading the charge on from the traditional bank's perspective. And I know they're getting bigger and bigger into tokenization. Of course, BlackRock, which is not a bank, but BlackRock is huge. Larry Fink is huge on tokenization. He, I think, called it akin to the internet in like 1996. So he believes that there's a big opportunity there. And once tokenization does happen, then I think prediction markets is a natural way that it can evolve. Okay. With regards to the Ackman proposal, or the proposal that I had for Tesla, don't they already have this mechanism in place? How do Tesla shareholders vote? He's talking about Say Technologies. They use their brokerages. Brokerages have this info, the cost basis, how long they've held. Yeah, I mean, when I go into Say Technologies to vote, that's just like a Plaid integration. It's very easily a Plaid integration, and that Plaid integration hooks into my brokerage account, and it finds out, what my cost basis is, how many shares I have, so on and so forth, to validate that I am a shareholder, and then I can vote. So it's not a technical problem. It's more of a regulatory, legal-ish problem. I don't know that it would be some preferential treatment or what the case would be. That's where I foresee some of the hurdles being, as opposed to can we get the tech to work? Right?
Yeah, nothing to add there.
Okay. Would you buy SpaceX at any valuation? What is too expensive?
So I would, if they were IPOing, I would just do the IPO access thing, and it's probably going to give me like a share on SoFi and a share on Robinhood, maybe. And outside of that, it's probably going to be way too expensive. Rocket Lab is public, and that's probably the closest that you're going to get to be able to understand like where it should be trading relative to that. We'd have to look at the proxy materials once they're filed. Maybe ASTS as well, but yeah, there's a price that's too much to pay. And usually with IPOs, the best thing, unless you're allotted shares and you think it's a good deal at that point and you plan to hold for a while, it's usually better to wait 3 to 6 months afterwards, because most IPOs do the and then they kind of fall back to earth as well. It's also going to trade at an extreme premium, I think, over Rocket Lab because of Elon, in part.
Yeah, I generally agree with that. I think it's going to be difficult to suss out what the actual fundamental value is worth, plus the Elon call option on top to add a little extra premium, and then what all that foam is at the top of that, beer glass that is the hype around the brand and around the aura, let's say, of Elon being the richest person in the world and having all these publicly listed companies. I think if you can suss that out, then you're going to get to a valuation. I can't necessarily do that without looking at their financials. So, oh boy, we have a lot of questions.
Mm-hmm.
Hi guys, Tevis, like me, you're bullish on Nebius, but I don't think I've heard your view on CoreWeave and Iron. Few words, please. Do you own any? I don't own either of them. I've spoken in passing in podcasts or in live streams of why I'm the most bullish on Nebius. The reason is because of the ecosystem, as well as the subsidiaries, as well as the fact that Nebius, in my opinion, with the knowledge, like with the research that I've done, is the best end-to-end sort of full stack platform relative to CoreWeave and Iron. I don't like CoreWeave because they have a ton of debt. And I don't like Iron because they don't have what Nebius has, which I deem to be a moat or a competitive advantage. The subsidiaries, which themselves are drastically undervalued, as well as the product offering, Token Factory, and what they're doing from the software side of things with inference and training, I think is definitely something that will differentiate them from just being a sort of data center play. Right?
Yeah, I like Nebius the best. I think it's qualitatively a little bit better. I'd rank them Nebius probably first, Iron, and then CoreWeave. Debt was an issue as well. I like that Nebius, is focusing on actually owning rather than renting, compared to CoreWeave. Iron, I like their leadership. Like they successfully pivoted away from, or they're, I guess not fully yet, but like close enough to it that they are no longer seen as a Bitcoin miner, and they always had like a different strategy as well. When you compared to their HODL versus like Mara and Riot and others as well, it was clear that they were trying to pivot. They successfully did. That's a hard thing to do. But for me, I like to really just concentrate. And so if I was going to invest in this space, it would probably just be one of those names, and that's Nebius. Though I think all will do well.
Yep. How much will it pump in your opinion? I think Thomas asked this question twice. Guys, I promise you, I am bookmarking the questions. So I have your questions here. In January, I think Nebius, has resistance around 130 range. It topped out, 150, something like that. But it has resistance 125 to 130. So I would imagine it would pump to 125-ish before seeing some pullbacks. I'm just talking straight from like a technical analysis point of view. Now, if they announce something massive, this thing jumped like 50+% on Microsoft news. So TBD, but that would be my best guess, right?
Yeah, it sounds. I mean, I don't think it's going to pump, so, but it could.
There you go. All right. Can you review? We'll do this at the end. Are you expecting more mergers and acquisitions in 2026 with possible rate cuts? I don't know
Not,
which company, but if you
yeah,
mean in general, then yes.
yeah, not because of rate cuts so much as the deregulation that's happened. So yes.
Okay, cool. Where are you? I'm visiting my parents for the Christmas and New Year's break. Election years are high volatility, good time to cash up.
Seasonality, mid-year, mid-cycle elections are usually not very good. There's usually some drawdowns until after the elections, and they do quite well. I think we'll be fine. Like, we may not have the overall returns. I think this is more of like a stock pickers market, but I think there's going to be some good opportunities up there. I have been raising some cash, although I did make some buys this week. But I'm happy to have some cash just to look for opportunities. We could get a sell-off in January with some of the names that have done incredibly well, where people have waited a little bit just so they don't have to have tax implications right away.
Mm-hmm. Yeah, and for myself, I want to consolidate a little bit more into high growth hyperscaler names, is what I've talked about over the past couple of episodes. The reason being because I see it as more relative safety in names that I still think will run in 2026, but are lower beta than what I currently have.
Mm-hmm.
Speaking of, I think 2026 is going to be a big bull market for Meta.
Yes. Yes.
Um,
Advertising. Yeah. Election year.
Yeah,
And you look
World
at where it's trading, its expectations are very low. And there are some measures that Meta is actually cheaper than NVIDIA. I'd say NVIDIA is significantly the cheapest overall. But and I'm not going to invest in Meta, but I think it'll have a strong year. And I hope I'm wrong.
So as of right now, about 7% of my portfolio is in Meta, and I want to get that eventually up to about 15%. And similar to Amazon, I think like right now I got about 3% in Amazon, and I want to get that up to 15%. So I'm building, and I think both are going to do very, very well in 2026 because, I mean, look, you just look at what they did in 2025, and they've underperformed the peers. I think even Apple is like higher than than Meta and Amazon, and so I just I was actually looking at some really. I want to get your thoughts on this, Roy. We'll pause the questions for a second. I was looking at some really juicy spreads for Amazon. So 2027, but I might wait until January until the 2028s come out. But I was looking 2027, 230 to 280. So you sell the 280s, you buy the 230s. Net debit is about $19 per contract. And you can if you get max profit at 280, if Amazon goes to 280 in 2027, by the end of 2027, you can 3x your money. But in order for you to, like, you can still make a lot of money with like very modest Amazon growth. If they go to 250, you can still make a good
Amazon
amount.
or Meta?
Amazon.
Okay. Yeah, I'm not as bullish on Amazon. I think Meta is a better opportunity there. And if I was going to do vertical spreads on Amazon, I don't think it's that bad. On Meta, I would actually just prefer leaps if I was entering the play. But yeah, it's. Yeah, I think it'll be fine. Like, I think vertical spread is a good vehicle there for Amazon. For you.
Yeah. I'm probably. I mean, I should in my model that I built out for my allocations. I should sell some SoFi, but I don't know, man. I'm so reluctant because I think SoFi is going to have a great year in 2026 as well. I'm probably the easy culprits or stuff that I don't want to own already, like stuff that's small percentage of my portfolio that I'm tax loss harvesting on, or that I got into it because I got caught on the wheel, and then BMNR is not cooperating. But ideally, I'd love to reduce my BMNR position at some point, 50s plus. I'm definitely not going to be reducing it at this price. Like, that's just silly. But
What is your weighting for SoFi? Like, what percent of your portfolio, if you don't mind sharing, just
yes,
approximately? Because that's a factor here.
that is my weighting. Yes, I have
It's your
30%.
number 30%.
Mhm.
Okay, yeah, significant. So yeah, he's not selling it because he's bearish. It just when you have a certain portfolio size, you can do 30%. It's fine, but especially after a big run, it's okay to take profits, guys.
Yeah, and I would, if I were to reduce SoFi, I would only reduce it to 25%.
So bearish.
All right, Aman, I saw you ask thoughts on Zeta. Guess what? You also asked thoughts on Zeta 12 minutes ago. Please, just ask once. I promise you guys, I am bookmarking them. Thoughts on Zeta, Roy?
Yeah, I don't understand Zeta nearly as well as I do Apple and Meta. So if I was going to invest just for advertising, it'd be those two or PayPal, just because there's zero premium given on the advertising there. I think Zeta is kind of like Oscar in my mind, where it's a good company and maybe a decent opportunity, but I don't have a high enough understanding to put anything on there. But advertising is some of what the advertising that's out there is being disrupted, and I prefer to be in the app loving and Meta type of world where you're going to make sure that human eyeballs line up with those ads versus what the trade desk. I mean, you can see there's some tough headwinds. Now, I will say Zeta, like if you look at their earnings, like strong history of outperformance, strong leadership, strong company as well. But yeah, I don't know them like nearly as well as I do with Apple and Meta. So
yeah. Okay, we were at here. So yes, we're bullish. Meta 2026. Own anything that doesn't move, but you won't sell it.
that's this right here for probably both of us. If you want to throw that up,
BMNR. What is it?
Bitcoin.
Oh, dude.
Yeah, I don't plan to. I'm not a whole coiner, and I don't ever plan to sell my Bitcoin. Like there are things that might happen, where I need to or have to, or things change for me at some point. But yeah, overall, it's not moved, especially relative to the metals or even the S&P 500. And I also have some silver as well. I sold a lot of my silver a year and a half ago. Bought things with it that, even though it's been on this colossal run, I don't regret doing that. It was the right decision for myself. But my remaining silver, I also don't plan to sell that, despite this massive spike up.
Mm-hmm. Yeah, I mean, I guess Bitcoin. Wasn't thinking about Bitcoin, but I guess
It's not moved.
If you could ask Santa for one catalyst for any stock, what would it be? Oh, good question. I know what mine is.
Okay, go ahead.
I would ask Santa for a Nebius press release on another hyperscaler, probably Google or Amazon. Because I think that would be what I have enough of a weighting in to make a significant dent in my portfolio, and what has a much higher beta than SoFi. So like if we get a SoFi, huge announcement, it's not going to move the way that Nebius is going to move on a huge announcement. And I think a hyperscaler for a big deal is going to be a big announcement. So that's what I would ask.
Yeah, I would ask for almost something asked for PayPal, but I don't know if one catalyst would be enough to even move that stock. So Air Test Systems probably like just an further announcement of an expansion, like of the Sonoma units that they're selling, or anything related to the gallium nitride, and we'll probably get something like that here in the next month or two. But
you know how I know that you're a good partner? Because you're loyal, like to a fault loyal. I have been in and out of so many freaking stocks, and the entire time that you've just been in PayPal, it's freaking crazy, man. And I'm either easy from like conviction up and down perspective, and you're just like, PayPal, they abuse me every single time. They don't give me any, benefits, any rewards, but I'll stick around anyways.
Well, no. I mean, like, if Q4 earnings come out and like their guidance is just all over the place, they're not putting out that key picture. They're like, hey, Brandon's going to slow for it. Just like, okay, I'm going to reduce my position. I won't exit fully, but yeah, I mean, we could see PayPal trading at $50 a share now. Again, I think that the most realistic downside of PayPal is opportunity cost, but I mean, that's proven out so far. And if they, frankly, they have stumbled a little bit here in the second half of the year, really over the last month and a half, 2 months. So yeah, I'm always willing to cut when I change my mind on a position. I tend to not let, like, unless it's a critical piece, like 1 or 2 events, sway me, even 1 or 2 quarters necessarily. So that's why I'm still in HIMS. That's why I'm still in PayPal. That's why many of my positions I'll hold them longer than you guys, and it's neither right or wrong. It works well for me.
What stock are you most excited for in 2026?
Air, probably AEHR. So SoFi, I think, is going to do incredibly well. But Air, I don't know. It's one of the, I like the idea of like something that's just kind of forgotten and overlooked by much of the market. I posted a pretty detailed video earlier this week, and a lot of people are like, nah, it's not going to do anything. There's no opportunity. And that's fine. Like, this micro caps are not a stock that necessarily everybody should be in, although I think it's very unique. But I think it's going to surprise a lot of people, including you, Tevis, since you're a shareholder, or will be soon.
Yeah, will be soon. Yeah, I would agree with the fact that SoFi is going to have a great year. I think, like, I'd be reluctant to say NBIS or BMNR, because BMNR always has the ETH overhang that, like, if ETH does nothing, which, I mean, ETH is well known to do nothing, then BMNR is going to do nothing, or it's going to have an anchor trying to carry it upwards. And then on the NBIS side, it's so sensitive to any AI news. So it's just like there's too many unknowns. Like, if OpenAI does something crazy, if NVIDIA does something crazy, if China does something crazy, if Taiwan does something crazy, like, there's an ongoing list of like what can bring NBIS down. So I would then say, like, okay, well, SoFi, I think, is like, if I had to stake my life on a stock going up next year and I had to choose one, I mean, I'd probably choose one of the hyperscalers that I own now, but you get my point. Like, SoFi is a steady Eddie for me in my portfolio, and so I think I'm very excited for what they have coming up in the new year. Speaking of staking my life on a hyperscaler, favorite out of the Mag 7 for next year. It's almost like I planned these questions.
Yeah, NVIDIA for me, easy.
Ooh. Yeah, I mean, I'll say Meta, and I think Roy answered why with regards to the catalysts.
Yeah,
Okay.
that'd be my number 2. Yep.
We want to wrap in like 15 minutes. And we have 18 questions. So real quick, and I'm not going to bookmark any more questions. I'm sorry, guys. I've been into stocks for about 8 years now. Roy?
Individual stocks, actually, just since January 2021. Actual, like, investing in the stock market, I think 1993. So a little while.
Before I was born.
I was 13, so.
Oh. Did I join the VG train yet? Not yet, but it's very interesting. Will banks such as JP Morgan getting into crypto hurt SoFi?
Nah.
So the real answer is be an accredited investor so you can participate.
Yeah. Be rich. Be rich. Yep.
Well, if it's a direct listing or a SPAC, you don't need to be accredited, Mary. You can just participate by buying the holding company. Did you guys vote on the BMNR deal they keep texting me about?
Not yet. I need to.
I think the deal's like, I think the vote is over, but
it's already collected.
I don't know. I didn't vote on it.
I missed out then. Yeah. I reluctantly would have voted for, like, the amount of shares that they asked for, like 50 billion. It's like so ridiculous. I'm like, I understand why you're asking, and I would vote yes, but I'm like, why did you ask for such a large amount? Oh well.
Curtis, $20. Thanks for the coverage of the stocks this year. Merry Christmas and Happy New Year, everyone.
Thank you, man. Appreciate you.
Okay, let's move on. Thoughts on Robinhood banking? Bullish.
Oh yeah, it's really good for the ecosystem. Yeah, I'm still using Wells Fargo as like kind of a secondary bank. Robinhood will probably be that secondary bank for me, so I can finally fully move away from Wells Fargo. But yeah.
Oh, Roy, Patrick said your stream just dropped. Curtis, thank you for the additional $20. Being fair, love that. Merry Christmas to you, sir. Tanner asks, so would you buy OpenAI at $830 billion? I personally would not.
No.
And Roy, it sounds like wouldn't either.
Yeah, no.
Will Rocket Lab go to the moon due to a SpaceX launch? Yes.
Probably the opposite. It's not always the case, but Rocket Lab, I think there's a lot going on for Rocket Lab. Short answer is when there's only really one play. I mean, there's ASTS and a couple others as well, but it's really just Rocket Lab. When all of a sudden there's two kind of similar plays on the market, some people usually, which are like really invested in just Rocket Lab, they will sell and then move some into SpaceX just to diversify. I prefer to concentrate personally. But yeah, I don't think that necessarily it's going to be bullish for the stock in the short term. That doesn't stop the Rocket Lab thesis, though. And Matt Money, man, he's made some money on that one. I was eyeing it, especially as it fell like into the mid 30 range, and it's still on like the radar. There's 6 stocks that I'm very interested in buying at certain valuations this next year. That's one of them. But yeah, it's gone back up a lot.
I mean, he told me about it in the single digits. I didn't buy. And honestly, couldn't have happened to a nicer guy for Matt. Like, he deserves all and then some.
White House correspondent Matt Money.
Yeah, exactly. What's your thoughts on drones and investing in that sector? If you mean Toby, then bearish. If you mean Amazon drones, which they're doing, then bullish.
I think he may be like Red Cat and Ondas. I don't understand the space enough, but I know that drones are going to probably do very, very well. There's a lot of commercial applications. There's also, because of Ukraine and Russia, a lot of military applications as well. So, but as far as like picking the winner in that, I don't know. I know Palantir has partnered with several different names, but not a space I know well.
Okay, let's move on. White meat, brown meat.
Brown.
Yeah, same. Thoughts on Novo? Yeah, bullish on the news. Go back to our HIMS segment at the start of the stream.
I'd rather invest in Lilly, even though Lilly's trading at a premium.
Thoughts on McDonald's? Okay, boomer.
I don't have any.
Yeah, I don't have any either, but great burgers that I eat once every 9 months or so. Same with KFC. Yeah. What about Peloton? I mean, what about it? I think it's going to do terrific for Tanner in 2026. Roy, this is you. Please comment on Enphase Energy.
It exists. The tough thing about solar. So, honestly, I'll give you one thing. The real thing is my question mark with Enphase is not that will they exist and will they do well in the next bull cycle for solar, which that's a very cyclical space. Energy is anyway, but even more so. There's a lot of regulation that's caused a lot of headwinds. It's trading at a very cheap valuation, but I think it's for a reason. And in my mind, it's hard to figure out basically when we'll switch from bearish to bullish in that space. The one possibility that's over this next year where I think could push us in that direction are the midterms. And so if you see a big blue wave and a lot of Democrats get elected, they tend to be a lot more friendly towards renewables like solar. And if you see that, you might see some appreciation in terms of the price. I think VG is the easier energy play, and so I'm invested there.
Yeah. Holy big man, Tim Sweeney. $100 to Roy Tevis already got his $100 low.
Thanks,
Tim,
Tim.
Merry Christmas to you.
That's really nice of you. Thank you.
We love Tim on this show. What Fed chair is going to be best for the stock market? Notice how he didn't say the economy.
Yeah. Well, so, I mean, whoever Trump picks is going to be somebody that is going to be very aggressive in rate cuts. That doesn't guarantee rate cuts. There's other votes there. Just because you're the chair does not make you a dictator. But yeah, I don't have a name in particular for the stock market. But
yeah, I think the one that promises Trump the lowest possible rates humanly possible. Is the mustache why you're looking better than I don't know if you saw this video, but I basically threw up an image of me last year when I made these predictions. I think it's a mixture, not really the mustache. Although if you like it, let me know. But I think it's a mixture of doing LASIK, so getting my glasses removed, losing a bunch of weight, and just overall just working out a little bit more. Although I haven't been doing that the last 3 months that much, but yeah, man, one year can make a difference. So thank you, Sir Charles. Very much appreciate that. Would you consider a pair trade with Mag 7 long Meta short Apple? Yes, but also like why get fancy? Because even though Apple's fundamental business is sort of dwindling, they're hitting all-time highs. And
yeah, I wouldn't short Apple. If we are in an environment where there's a flight to safety, Apple will be that fortress for a lot of investors. It still is, even though it shouldn't be, but it is. And Meta will do underperform in that scenario. So yeah, I wouldn't get fancy. I'd just go long if you want to go long on Meta.
Yeah, I would just go long on Meta as opposed to playing around with Apple. No, I'm not taking anything. Granted, like when I say I lost weight, I lost like 15 pounds. And over the course of a year, that's not a lot of weight. You just don't eat like a asshole and then you'll be fine. Do you and Roy keep all your positions in one portfolio / brokerage? You want to go first?
Yeah, I really have three kind of. So I have a good chunk of holdings, which is again from like when I started in 1993 when I was 13, of just broad-based stock market type of stuff. Start off as a very small amount of money, but the nice thing is if you're young, you have a lot of time on your side to compound, and that has. And so that basically is there. And I look at it maybe like once or twice a year, and it's there so that if I somehow blow up my entire portfolio, my wife and I can still retire and be okay. Then I have most of my holdings in Robinhood and then Webull as well. And I've got like $100 in SoFi, but I don't count that one.
Okay. Hold on.
Do you use multiple brokerages or just one?
I do, but before I go into that, Tanner, are you still here? Tevis looks like Hasbulla. Dude, I think I'm like 3 of those guys in a trench coat because I'm like significantly. Anyway, it doesn't matter. I have all of my positions scattered across different portfolios because that's just naturally how it happened for me. When I started investing, I started investing in my tax haven accounts, and as I continued to invest more and more, I eventually had to go into margin accounts, and then I have different accounts because of different tax advantages that they provide. And so there's another tax haven account that you guys don't have in the US that they just opened here in Canada, where it's like it's tax havened if you use the proceeds to buy a house in the next 15 years. So I'm like, all right, I'll take the money tax free. And if you don't buy a house, then it's just like that money gets returned to you after 15 years. So
Nice.
Cool. And so there's like that. There's a normal tax haven account, and there's a retirement account. And so I just had the money essentially, and I just sprinkled it across. And now I can't really move them to consolidate because they have different functions and they have different restrictions. So unfortunately, they're all in different brokerages. One thing that I have been doing is I've been selling some stuff in some different accounts and building a bigger position in the other one. So for example, let's just say an example. If I have 200 shares of Robinhood, instead of having 100 in one account and 100 in another account, and I have 200 shares of BMNR, 100 and 100, I'll sell the BMNR in one account by Robinhood, and I'll sell the Robinhood in the other account by BMNR, and so I have 200 and 200 in the same account. So I know that this account has my BMNR, this account has my Robinhood, and then I'm thinking about it more deeply to say like, okay, the tax haven accounts, should those be high beta or hyperscaler low beta? Just leave it there to compound. Should they be dividend? Should they be wheeling accounts? And that thought process goes around, how do I want to optimize further? But for SoFi, for example, I'm absolutely going to have it across all my accounts because it's just, I don't have a single account be that consolidated where it's 30% of my portfolio that I could just have like, oh, I have XYZ SoFi. So long answer, but just to say yes.
Yeah.
Okay. We are gonna go. Block is damn cheap, probably for a reason.
Payments company. Yeah.
Okay, so we're gonna head out. Before we head out, Tanner, I asked if he was still here, and I don't know if he is or not. But if he is, he can let me know. so that we can do this. If he's not, then I'm not going to do it because he doesn't own Peloton yet. And yeah, just until he answers, or if he answers, happy holidays to everybody. This will be our last stream, of course, before Christmas, and the next Tuesday, unfortunately, falls on the 30th of this month. So I'm not sure that we will be doing a stream on the 30th. I have family time. Roy has family time. I'm sure we'll talk about it. And maybe there could be a stream. Maybe there could be something that's at different hours. But yeah, Merry Christmas to everybody. Love you all. Thank you so much for your support on the Bootleg Weekly. Hope you have a restful holidays with loved ones around you and lots of great food. And hope we all get a Santa Claus rally. Thank you, Ricardo Flores, for the memberships. And Roy, do we want to do some charitable giving and direct our audience to somebody else who is in need?
I've mostly been giving like locally here, but Wounded Warriors I always really like. I think that's a great organization that I don't know if they have something similar like that up in Canada, but it helps veterans, and I think it's a great organization. So
yeah, I meant to direct our audience to raid somebody, but that's like, bless your heart, bro. You're too wholesome for me, and you prove it every single stream.
Ricardo, thanks for the memberships on my end too. Appreciate you, man.
Okay, so because I promised him I would do it, and he's not even here to see it, he said, "Can you review my title and my thumbnail?" That's my question and answer period. Roy and I, are going to review Tanner's videos, thumbnail and title, and he can watch this or not watch this or do whatever he wants after the fact, but we will have held our part. Okay, so let me share.
And as you're sharing that, let me just say, Tanner and I have this philosophy of like, what would Tevis do? Just because Tevis is very good at titling his videos and also with the thumbnails as well. So,
all right. So I can go first, or maybe Roy, you want to go first? Or this is Tanner's video. It's underperformed relative to this. This was terrific.
yeah.
But this video now. Roy, how can Tanner improve this video?
Well, there's no mystery there. So it's $40 price target. And yeah, I'm not sure that the image is necessarily needed there. But yeah, that's all I would change, is just add a little bit more mystery. So not have that in the thumbnail necessarily. But
yeah, that's exactly like the first thing that came to my mind. It's like, why would you give away the price target immediately in the thumbnail? It gives no incentive for people to click. Top analyst, nobody knows who this guy is. Like, he's not recognizable by his headshot unless somebody in the chat can tell me who that analyst is. Let's see. Oh, it's Andrew Jeffrey. Great. Great analyst, high price target, of course, on SoFi. But I don't think anybody can spot out Andrew Jeffrey on the street. And so I would say, like, that's something. I would probably build some type of intrigue here if you're going to keep the price target hidden. Like, highest analyst on the street has this warning about SoFi or something related to, or he has the highest target on the street, and this is his crazy 2026 SoFi prediction. Like, that would make me want to click a little bit more, but you give away too much and you take up random real estate with unrecognizable folks. So that would be my my review for Tanner's video. Hope he watches that. Oh yeah, also the fact that it's 43 minutes long, but it's an interview, so that's why it's 43 minutes long.
Yeah.
So there you go. That's my gift to Tanner this holiday season, was totally shitting on his video.
And Peloton.
Yeah, and Peloton. They go hand in hand.
Man.
No, we love Tanner. We joke, but he is inferior mustache, superior charts. That's how I say it. And speaking of, can everybody do me a big solid here? And let's go right now as a group, and we're gonna go to Tanner's and Steve's stream. And what are we gonna say, guys? What's something that we can say on this stream?
Peloton, Peloton to the moon, PTON to the moon.
Peloton to the moon. Yeah, PTON to the moon, guys. Future investing is streaming right now, looking confused as ever. Peloton to the moon. All right, that's what we're saying. Sorry. Okay. Thank you, everybody, so much, and we'll see you perhaps in the new year. Love you all. Merry Christmas. Happy New Year. See you next time.